Well, happy Monday morning, 8 o'clock Central Standard Time, November 24th, 2025. Welcome to Risk Neutral Trading. This is my virtual trading journal. And here we go on another fun-filled, exciting week of Thanksgiving. So the last 2 days of this week will be a holiday. No trading, no stream, etc. Yeah, so this is my virtual trading journal. I am not licensed or to provide, trading or financial advice. However, and to reiterate here, this is my virtual trading journal, and I allow anybody to watch, listen. I take live trades. This is a live funded account with AMP futures. Oh, what's going on here? It's a live funded account with AMP futures. I use Bookmap and IRT for my charting. I'm not funded in any way, or not funded is the wrong word. I'm not monetized on YouTube. So subs and likes would be super. And, participate in the chat's really great. As I said, I trade live on a real money funded account by me. It's not a prop thing or anything else. And that's why I'm trading micros at the moment, to make sure that I have everything straightened out with, and in accordance with my backtesting, etc. I stream 1440p, so if it's not real clear on your side, click the gear button in YouTube there and upgrade, or select that high def. I stream to YouTube for two reasons. Number one, it's a big concern for me in the stream here for accountability and transparency. And YouTube provides another layer of that. Also, I can review the stream on any device, so that's huge for me. These are stand-up desks, and I'm standing here from 6 in the morning till around, 19, 20, 100 in the afternoon, and that's makes for a long stand for an old guy. So here we go. Let's, as I said, this is Bookmap, and this is IRT. Let's look at the numbers. Excuse me. I use two news sources. This is investing.com right there. You can filter it any way you want. Country, reports, 2 stars, 3 stars, 4 stars, whatever you want to do. I prefer this format of investing.com for screen snapping and posting, into my Discord or whatever else. And so you see that we only have a couple of numbers out this week. Today. And they are only 2 stars, so not really anything important. This week, we're going to have something as soon as this thing wakes up. Come on. There we go. This week, we're going to have some reports out. There's several. The government is back in session now, so they're starting to get their act together with reporting, which is really nice of them. They didn't stop taking their salaries, of course. GDP. What else we have? And of course, Thursday is a holiday, and Friday is a shortened day. Chicago PMI and the Fed balance sheet, but I don't stream on these short holidays. It corrupts my database as far as I'm concerned. And what are we doing in earnings this week? Not much. There we go. Nothing earth-shaking. The other news source that I use is Financial Juice, and it has a similar calendar function on the left side and a squawk box function on the right. Also, Financial Juice picks up random risk potential that doesn't. Investing.com reports on known financial reports and Fed meetings, etc. Calendar scheduled. Financial juice picks up random stuff like Trump's going to sign some executive orders at 1,500. I wonder how many executive orders this. I guess he's just decides he's going to make his own laws. I don't know. It seems like a lot. I don't remember anybody ever doing that before. That's puzzling. But anyway, it's really good that Financial Juice adds these in because these are potentially market-moving opportunities or occurrences, right? So there we have it. Moving on to the pre-market. That's the most important, or usually. Well, here we are. Yesterday's RTH, Friday, I should say, and so far in the overnight. What does that look like to you? Well, inventory, first of all, we gapped up considerably within range of Friday, but we gapped up to the open Sunday night from the close. So if you have to look at this, all of the inventory traded so far in the overnight is above Friday's close. It's more or less balanced as far as our open last night, and it's a pretty balanced profile. I'm going to say my expectation is because of the open relationship to the close on Friday, that we're likely to have some responsive selling to take profit. If you were long all night, one way or the other, and you're up here now, and here was Friday, maybe you're going to want to take some profits. Then I expect we'll have not any real dramatic movement, but we'll probably have an open auction. That's my estimation. I want to point out that this is the micros. You can tell exactly what you're looking at on my charts always. There's the instrument, the chart type, and the session. This is the micro ES, micro NQ, ES market profile, and my higher time frame chart down here, which is the micro composite. This is real simple. Everything I do with trading is just price data, probability, and nothing magic, Nothing's mysterious, nothing's magic. It's just all straightforward. That's the way I think, and that's the way I try to trade. Full session volume, the micro composite. This is, first of all, it's the RTH session only. Each one of these candlesticks is 1 day. These are daily candlesticks. So this is Friday, Thursday. Whenever price overlaps, I draw the volume profile around them, and that creates the micro composite. Now here is the micro composite VPOC for the micros. ES micro, not ES mini, and I'll show you why I'm saying that right now. Notice where the micro composite VPOC is. It's down here at 66.5. Look at the minis. It's up here at 67.65. So some people that trade, they'll watch the mini and trade the micro or whatever else. I'm not sure that's a winning theory, but to each their own. So here is the micro composite, as I said. Now these red and green lines here are the high and low volume nodes of the most recent micro composite volume profile, and those levels push automatically to Bookmap. I manually enter the highs, lows, micro composite, VPOC, those things in Bookmap myself. The session prices also push automatically to Bookmap continuously. And if you want to look at the naked volume points of control, there you are. Do a screen snap and you got them. Bookmap. Well, the volume is about normal, I guess. Bookmap. Here we go. So here we are on the session. The first thing I do at the opening print of every session is add this super secret indicator here, which is, drumroll, a vertical line. That is just a visual cue for me. If I glance left and see this blue line, I know that whatever session we're trading, I have the complete session in view on the heat map. So I have a firm understanding about context. So let's look at Bookmap. We have the DOM, the ladder, the order book, whatever you want to call it. And all this is all the prices and the resting liquidity. Here we have the micro composite column where I enter these levels manually. This is the VPOC from Friday. Here's the naked volume point of control from Friday right there. And there's the high and low volume nodes are in this column right here, which we might be able to see at some point. There's a couple of them up there, and up and down we go. This is the full session volume profile, which started plotting last night at 1700. It will plot through the entire day today until 1600 and then reset and open again. So in other words, this is Globex. This is not the ETH session. This is the RTH volume profile, which resets at 8:30 in the morning of the RTH session. Remember, 8:30 this is Central Standard Time, and the market opens at 08:30 Central Standard. This is my my notes column, which is real important to me. The first thing I do is establish the open type, and then there are only 4 of those, and they're very simple. There's only 2 criteria. They determine the column for the statistics, which we'll enter in a few minutes, along these associated session prices, which are pushed automatically from IRT to Bookmap. Okay, how do we establish the open type? Well, if we open right here, right now, how would that compare with previous RTH close? There's a close. We're higher, right? How would that compare with the previous RTH range? Well, we're within range. You can't see that on here at the moment, but if you look over here, you can see where the RTH range was, and we're trading within it. We're up to the top pretty close, but I think it's actually just behind here. So what we're looking at is another day of potentially open higher in range. So let's now clear this column and get rid of the Friday's notes and levels and statistics. And then we'll look at the statistics from our study today. And that is done from right here. It is this study in IRT. Now, IRT very graciously highlights the correct open type, but only after 8:30. Coincidentally, we opened higher in range on Friday, so it's already highlighted. There's only 4 open types: gap up, higher in range, lower in range, lower out of range, which is a gap down. This just as with everything I do, straightforward, common sense, data, probabilities. The system looks back at 1,625 trading days, the past 1,625 trading days. Of these trading days, we opened higher in range, 498 of them, 30%. Of the days where we opened higher in range, price revisited the overnight volume point of control 81.3% of the time. Watch this. It's real difficult here. 81.3. Ooh, baby. And that's all there is to it. Now, I'll just go down the statistics one after the other. Overnight volume point of control. The next order of business here is 74.9, eh? And that's the overnight mid. And that is 74. Ooh, would help if I clicked the right button. 74.9. Now, I'm going to continue these just down the list, like I said. These are not fixed, hard, definite lines in the sand. remember, this is probabilities. This is the percentage of time that price revisited this price level when we opened higher in range over the last 1,600 days. Pretty likely we're going to do it again, isn't it? This is kind of likely too. Next. And you'll see after the day progresses, we invariably take almost all of them out. Overnight high, 74.7. Now there's a scary one. We're right up here now. We're going to get this one. 74.7. My mouse isn't doing what I wanted to do. Let's get up here. Ooh, I didn't do that very good at all, did I? New mouse and I aren't getting along. Well, come on, Alice. There you go. What else is next? Previous value area high, 71.7. And I don't see the previous value area high here anywhere. Let's look. There you are. Now, let me say something about this. The previous value, the value area high and low, differ from the developing value area high and low in that developing is the current auction, value area high and low is the previous auction. Okay. Previous close, 70.3. There's a good one. Come on, man. This damn mouse and I are not getting along. Jesus, this is painful. I got a new mouse here, and I don't think we're doing too well. Overnight low is always a biggie. Where'd that go? Overnight low is 49.2. Let's get that in while we're down here. And let me see what else I wanted to do. Oh, yes, the IB high and low. I want to get one of the IBs for you. The IB high is 68.3. Now what we need to do is find one of the IBs. IB high, 68.3. 68.3 IB high. Why did I do that? Well, I'll tell you right now. Let's actually a great opportunity to talk about the price levels. So the price levels here are not mysterious or magical. They're simply data. And you'll notice there's no indicator on my book map or my IRT. The closest thing to an indicator I use is the VWAP. Stand by one, I got to step away. That's VWAP, volume weighted average price. So here we go. We've got a POC for the full session, which is over here. It's a more muted dark yellow. POC is nothing more than the price at which the most contracts have traded so far in the session. It just marks the price. In other words, we've traded about 4,900, more or less, contracts over here in the full session. And the minute one of these other prices trades one contract more than this price, This yellow line is going to move there. Simple as that. The fact that it's a yellow line, you'll notice it jogging all over. This just tracks where the price has been, the POC has been. There's also a POC for the full session. I mean, for the RTH session, same thing. And it is a more brighter yellow. I have as I mentioned before, there's a VWAP for the Globex and there's a VWAP for the RTH session. There's a mid for the RTH session, and that brings us to the IB high and the IB low. Confusing to some because of the nomenclature, I believe, and it's a holdover from the market profile days. IB stands for initial balance. The reality of these two levels is they only mark the high and the low of the first 1 hour of the RTH trading session. Boop, nothing more than that. And the rest of these things are just, previous close, overnight high, settlement. What else you want to know? You couldn't get more straightforward and simple. Nothing to be confused about. Nothing magic. You do have to wear, a pointy hat and have a magic wand, but, come on. That's trading, isn't it? That's what a lot of these guys want you to believe. That's for damn sure. So these are our statistics, and you notice that the high is going, this is live market, right? So the overnight high is going up, isn't it? Yeah. Went up a couple of ticks there. These are live. This is a live market, so this data is happening. All right. Let's, I need to do one other thing here now, which is the IB stat. Wait a second here. TLab stat. What am I doing? I'm getting all confused this morning. So the something I do every morning is the TLab post, and I'll get to that here in a minute when I can actually talk. You'll see why I don't multitask very well. There you go. So the TLab, what is that? Well, it is a bookmap Discord chat room called the Traders Lab. Started by a guy named Tom B. Professional trader, reportedly 46 years of trading. He never doesn't trade live, nor does he call trades. So it's a different, and it's a Discord thing, and it's obviously sponsored by Bookmap. However, you will never be solicited for anything in there, or at least so far. And good crowd of people, and there you go. The Bookmap Discord chat room called the Traders Lab. The guy's name is Tom B. I make a couple of posts in there every morning. The reports early on around 6, and then this snap right here, which gives the folks in there some sort of an idea about what all the current levels have been and are, and naked volume points of control and everything you want to do. So there you go. Let's get back to business here now. One of the things that you would, I suppose, think would be kind of important is if we could trade, eh? And the way you do that is you have to, with Bookmap, you have to activate the trade control panel by clicking this padlock right here. And then you have to choose a method that you will use to interact with the application and trade with your mouse. If you choose chart, the only place you can trade with your mouse is this active data column. If you choose dome, the only place you can trade with your mouse are the dome columns, and both is, as you expect, both. Now, I use, very importantly, multi-brackets. This is where my risk-neutral methodology is applied mechanically to my trades. You decide all of this stuff well in advance of the live market, of course, during your homework periods. 2 lots is the smallest package size you can have. 2 lots. Because you're going to need an even number. Then you determine the stop loss size for the entire package. Okay? And you do that. First parameter you look at is your account risk. And then volatility of the market. What instrument are you trading? There's many factors figure into that, but here we go. I've landed up on 12 ticks and 2 lots, 2 contracts. Once this is decided, the first take profit target, T1, is automatic. It's for half of the package. Remember I said they needed to be even. And it's for the same number of ticks positively as the stop loss is negative. Then you have a runner for the other contract. You can have 4 lots. You can have 4 lots high volatility. You can do anything you want to do. Have 1 million lots, whatever your account deals with and your temperament, etc. After you've done that, close it off. You'll notice I have all these metrics up here, which you can turn off or on, by the way. They're the same metrics as here. I don't need any of the other tools in the trade control panel because I have used multi-brackets. So I confirm the right package size. I click this button again. I get my real estate back. I'm all set up to trade because it's still green, padlock's open. I get cancel all and close all and the metrics. So we're ready to trade with a 2-lot risk neutral package. We're going to open here in 3 minutes. When we open, I'll put Blue Boy on the first print of the RTH session. And hey, rock and roll hoochie coo. Here we go. I probably forgot something, but we'll see. I'm not exactly Mr. Influencer. I don't know when my printer keeps waking up and starting itself, but anyway, sorry about that. So let's just see what's happened now. We have our statistics input. We understand what those statistics mean and how. And why. That they're not hard, fast lines in the sand, but they are probabilities. 74.9% of the trading days where we opened higher in range, looking backwards over a data set of 1,625 or whatever it is. The overnight volume, the overnight mid, no, that's the wrong thing. Yeah, the overnight mid was revisited 74.9% of the time. Boop. Here's the overnight low, close, high, value area high, overnight volume point of control. There you go. Simple, logical, simple. You understand about the initial balance high and low. Oh, and that's something I probably should have commented about. Why do I put the name here in the description, in the probability? Because the minute we open, which is going to happen here pretty quick, this flag is going to go to the high of this current upcoming RTH session, as will the low. So it won't be down there anymore. Going to be up here someplace, right? If we open right here, be here and here, I guess. There you are. Hi, Panda. How are you? Thank you. She's looking for Antonio. She's mad. Okay, we're going to open here in about 15 seconds, and let's see if this stupid thing resets properly as it's supposed to. If not, I'll do it myself. I've been struggling with this. Bookmap can't figure it out. Their latest solution is to have me roll this the version backwards. Jesus. There's our open. There's this. Nobody reset on time. Frustrating, yep. Reset now, yep. Doesn't work. God, that's frustrating. Panda, quit. There we go. Hey, baby. Yeah, that's now the market open. You start meowing the minute the market open. Okay, so this is where we were able to reset now. Not exactly correct, but it catches up pretty fast. I'm sorry for that. I don't know what else to do. I mean, when the people that built the program can't tell you what's wrong, it's pretty weird, isn't it? I think the Bookmap is either it's choking on the data and not, it's down. The reset is down the queue as far as tasks to perform. Here we have now the full session, which is the bright yellow. We have the RTH session, or I'm sorry. I can't really get it on there to show you exactly, but the two POCs, right? We have the brighter yellow. Yeah, Panda, stand by. We have the brighter yellow, which is the RTH session, and we have the more muted yellow, which is the full session. Remember I said the IB high and low would be on either side of our open, and there they are. Now, something I need to do on Bookmap here is, or on IRT, is I need to change from the full session to the RTH session. Like this right here. We've got a 15 millisecond delay over there. That's goddamn irritating. I do this for a specific reason, which I will explain here as soon as I'm through. Yeah, Panda, just hold on. Dad's up to something here. This is how we buy cat food here, Panda. So, cut me some slack. Yeah. The reason I do this after the RTH Open is to ensure that the value area high and the developing value area stuff are properly aligned. Save this, so just hold your horses here. I don't know why that thing keeps recycling, but that's kind of annoying. What is this telling us now? Well, here's Friday's RTH session, and here is our RTH session open, and we're trading straight up, right? NQ is lighting the world on fire over here. Here's our micro composite. Today, Friday. Oh, yeah, I got to change the market profile. There we go. Market profile. Okay. Are we having fun yet? I think so. Now I've got a pretty impatient cat down here I got to deal with. Here's the high and low volume nodes. We came cruising across the micro composite. Okay. Okie dokie. So let's get Blue Boy out here, the secret magic indicator. There we go. That's the opening print. I will ensure that I can glance left and catch that Blue Boy over here all day until I want to anticipate interacting with the market, i.e. trading, and I can zoom in all I want to. This makes sure that I have a firm understanding of context. And if you want to see what I mean, well, I was going to show you, but now I can't seem to do that. There's the opening print of the overnight. Good morning. Good morning, London. And back up they go, and here we are now. Okay. These are stops. There's the print. There's the IB low. What a coincidence. And there's the IB high. It needs to get up a little more, doesn't it? You notice that now, let me point out that, sorry, I'm busy. I'm sorry. There's the blue boy on the opening print. Here we are. We've taken out the overnight high. And not quite the overnight low. Look at there. See? Boom. So there might be a bit of a squeeze in play this morning. You see, yesterday or Friday, this was the big, we don't think you know what you're talking about deal over here on Thursday. Kind of a squeeze we had, balance. We're going to do it again. We're going to squeeze them a little more. I don't know. That's the big thing that you need to be really sure you understand is you don't know. To try to predict or imply, force your will on the market is a losing proposition. What you want to do is trade what you see, not what you think, and anticipate. Now, if, I'm trading the vetted trades that I have are the initial balance trades, which we'll talk about later. But I forgot to put the open on there too. And that's it. I'm only going to trade vetted trades. And I'm going to wait until I anticipate one of them setting up. That's the beautiful part about doing your statistics, your homework, and trading properly vetted trades. Nothing is a surprise. You're not a gunslinger. It's not, clicking the mouse like you're killing snakes. None of that. No anticipation, no panic, no... You anticipate when a trade that you have previously identified and vetted with statistics to have a high probability or a positive expectancy is setting up. You watch the A, B, C, whatever the criteria are that you have for that trade. And you anticipate. You can zoom in, you can get ready, you're all set with your mouse, whatever. Big difference. Big difference. Okay, another thing I'm going to do here, which we can get after now. Looks like the stream is streaming. I don't know what's up with that printer, but I'm getting kind of tired of it. Stirring or whatever it's doing. I don't know. I don't know whether somebody's trying to print something here. My wife or daughter's sound asleep, so it must be my wife, or else I'm going to just shut it off and stop that racket. What was I talking about now? Okay. Yeah. Now, how to say it? Well, first of all, we know that the initial balance high and low are what? The high and the low of the first 1 hour of the RTH trading session. The trades that I have vetted are the two initial balance trades. What does that mean? That means that there is no statistic, nor is there a possible trade for me until after 9:30. What a pleasure. Do I continue to watch and narrate the market? Sure. And let me also say something about this narration story. As I said early on in the pre-market, this is my virtual journal because I don't multitask very well. And I think Tom suggested narration in the market. He says that a lot. And I worked out, well, let's see. If I narrate and stream this with OBS, I capture everything that I'm looking at, both of my monitors here, of my main trading monitors. And then my voiceover provides insight as to what I was thinking. Poof, I don't have to screen snap, type, do any of that noise. And I prefer to have all the data that I need to trade with right here on the hard right edge and keep a firm understanding of context through the entire session. Because I don't believe you should trade counter trend, counter context, etc. There you go. What happened? Are we going to take some profit here? Well, I don't know. Looks like we did the usual trader up, continue up a little bit, and then start selling it down. Let's see. Here's Friday. Here's today. Here's this micro composite volume point of control for the micros, not the minis, for the micros. Ironically, the minis are completely different. There's the micro composite for the mini. Shut off the naked volume points of control there. Here's the MCVPOC for the mini. I'm surprised, actually. So, we've got no reports coming out or any kind of earth-shaking news here. We have the ever-present danger of unrealized critical risk, of course, and why I think it's really important that you are vigilant. Trying to do this. You see how well I screen snap and stuff? Terrible, huh? Unrealized critical risk. What is that, you ask? Well, let me show you something here. What I talk about here and think are not, is nothing, there's no political overtone in what I am thinking or saying. However, as traders, we want to be sure we have an understanding of what may or may not develop in the market. That's why we look at the reports. That's why we look at the earnings. We know, because it's pre-scheduled long in advance. Look at there. They changed this already to the auction. We know that the non-farm payroll is going to be released at 7:30 in the morning, the first Friday of every month. And that's years in advance, we know that. We can plan for it. We can mitigate that risk. We can have all of our ducks in a row. Oh, come on. This right here, see that? That's 229-point sell-off. That came out of completely no place at 10 o'clock in the morning based on a tweet. I mean, no problem. Guy's got every right in the world to tweet whatever he wants. But that's what happens to the market. Now, if you were not protected, if you were just gunslinging and didn't have stops and targets in there, you could have lost your account. So in my world here, I refer to this as unrecognized critical risk. Can be out of anywhere. Maybe that's not the right word, but let's think of a new one at some point. Okay? Not political. It's the fact. You want to, if you're the primary objective of every trader is to preserve your account and to grow it. You know, you can have the most fantastic strategy and all kinds of things you want in your life. You blow your account up, you can't trade tomorrow. What difference does any of it make? So that is the first most important job of every trader, is to preserve and then grow your account. And when you have potential risk like this roaming the streets, you got to be careful. You know, you need to be on extra special guard, in my opinion. And what do I mean by that? Only trade vetted setups. Now, because we've only had this administration, everything going since January, a maybe a back test over, like I back test 500 days. It doesn't really, it does incorporate this, of course, but, you know, in the scope of 500 days, it isn't necessarily a large, maybe it needs to be a weighted look back somehow. I don't know. But what I suggest is that you only trade vetted trades, and you very, very definitely have full brackets in the market when you enter a trade. And if you're trading a live account, as I am, then make sure your bracket orders are server side and not local. Of course, you could get hammered and take a loss, but if you've got your stops and targets in, you might get slippage, but you're going to get out. You're not going to wake up to a margin call or a blown account. Just, you know, just a word to the wise. That's how I'm approaching this market, and it's not political. The point I want to make is it's not political. It's a fact. It's the market. This is a new risk that's been introduced into our market, and it is a unscheduled or unidentified, can drop out of nowhere, can drop out of the sky, like right here. 10 o'clock in the morning, a tweet on whatever that is, Truth Social. The tweet had no basis in fact. In other words, what he was complaining about hadn't really happened, apparently. What he said he was going to do didn't happen, apparently. But look what the effect was on the market. That's my point. That's what I care about. I don't care about any of the rest of it. I care about that right there. And so should you, in my opinion, as a trader. And who you voted for, or what color ball hat you wear, ball cap you wear, is up to you. Who cares? You know, that's your deal, not mine. So here we are, back in the market. We're at 847. We've got no news impending. They brought her down here to the open. Ooh, the open. And that's as far as they got. Now, IRT is still choking, or in my computer, or some goddamn darn thing over here. We've still got a 12 millisecond lag, 10, 12 millisecond lag on processing. We are high volume, about 362,000 contracts have traded on the micro since, or in the mini since last night. 489. You see how the micro volume is a lot higher typically than the mini? That's to do with the price, obviously, but there you go. I guess if you're not, I'm assuming everybody understands the relationship between the mini and the micro. The mini, which is over here, and the micro, which is what we're watching now. Oh, this is something important to probably to, illustrate here. Look at us go. I'm watching this sell-off. Who said we were going to take profit? No, it was some responsive selling. Who was that mess, man? And that is absolutely a joke. I anticipated, as I talked about it in the pre-market, based on the fact that our inventory was 100% long. They're going to adjust inventory, and if you were long all night and we're up a bunch of points, what would you want to do? Take some profit, right? Not rocket science. So what I wanted to show you was, and here, let me just show you that. Here's the open. This is RTH now, right? Remember, we're in the RTH session only. This is Friday. Close. They traded her up all night. We opened here today. Traded up. What are we doing? I'm guessing we're going to trade back down here. Take some profit. Myself. That's what I was talking about. All right, let's get back over to this. Let me show you something about Bookmap you may or may not be aware of. The trade control panel, the green boy, the padlock's open. That means that I've selected a method to trade with my mouse. B, it's still active, right? Because it's green and the padlock's open. I'm going to trade with both. Let me also say one other thing, sorry. You can trade with your keyboard hotkeys in either configuration. If you have to set them up, which I have done a long time ago, but the focus of the computer must be on the Bookmap application for your keyboard to work. If you're poking around on some other screen, you look over at Bookmap and want to enter a trade, not going to happen, Captain. You got to have the focus of the computer back on the Bookmap application. That's obviously nothing you need to worry about when you're trading with your mouse. Keyboards, I'm talking about hotkeys. Now, this has been activated. We know it's green. Everybody's happy. Okay, let's see what's that what's the ES? What's the difference in the ES right now? Well, there's the ES. There's our thing. Let's put Blue Boy on ES here. We're not doing so good. There's the ES. There we go. Okay. Oh, here comes a trade on the MES. Guess what? Click, 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 click. Nothing going to happen. Notice this. Trade control panel immediately resets to off when you change instruments. You must reset, choose how you're going to trade with your mouse, and your multi-brackets will come right back to life, but can be a real pisser. Just obviously the voice of experience talking here. So here we are in the mic. One of the other thing that I wanted to make sure everybody's aware of, the difference between the minis and the micros. The micros are 10% of the minis. A mini trades at $12.50 per tick. Micros $1.25. So if your goal is to manage your risk, protect your account, and you're in some sort of a phase where you're verifying stuff, you've got put in a new version in your Bookmap or something, or you've got a new idea, what are you going to do? Well, if you're not a complete donut, you're going to go down to the best thing you can do is to reduce your risk as much as possible. When I take a trade here in the micro, with a 2-lot risk neutral package, which went right over there, with the risk neutral 2-lot package, maximum stop is 12 ticks on 2 contracts. That's 24 ticks, right? Times $1.25. That's $30. On the mini, it's $300. If you're trying to grow your account and protect your account, and you're doing things, try this, try that, whatever it is, you use your head. And that's exactly what I'm doing. And I'll show you some stuff about that a little bit later. But, right now we're zooming up to the end of the first 30-minute bracket. The A bracket will be in on the market profile, depending on how you have your lettering set up. And what else is going on? Let's just see here. Hey, Antonio. Bon dia to the man. Panda was just in here singing up a storm looking for you, by the way. You're in big trouble, buddy. Might have been the snacks she was worried about, I think. Yeah, so I'm going to give some long, hard thought whether Bookmap supports suggestion, since they can't figure out why my volume profiles don't reset properly, is to roll back to the last version that I used where it did work, that I believe was the previous one. I don't think I'm going to go there. I think I'm going to stick with where I am right now. And something about these programs, not IRT doesn't update anything really anymore to worry about, but Bookmap does frequently. Like one of our trading pals, Garrett, updated to the recent beta in Bookmap, and only to discover that the trade statistics don't work and a bunch of other stuff. So now he's scratching his head trying to figure out how he's going to do that. I trade alpha. I trade the, production. I don't need to be in a big hurry. I want stuff to work. My goal is to trade, not be a test pilot for Bookmap. I think that's sound advice. And I don't think I'm going to bother rolling back. I can, just bitch and moan every day and click the reset button. And you notice that after about the first couple of minutes, everybody's right back to business again. Everybody's aligned properly. So here's the POC. Here's the full session POC, or the RTH session, which is the brighter yellow. And the full session is right on top of us too. So no, here's the full session down here. See how it's a darker, more muted yellow? Pretty quick, they'll align. What have we done stat-wise? We've taken out the overnight high, the value area high. And we have the mid and the VPOC below us. Oh, no. No, hush my mouth. We took them out. We got them all. Yeah, we've got them all here. See how those work? Here's something kind of cute about IRT. Excuse me. Come on. As I mentioned in the pre-market when we were doing the statistics, IRT conveniently highlights the correct column for the open type. So just to confirm you were figuring them right. I mean, how it's so simple. How could anybody miss? But anyway, unfortunately, it only happens after 8:30. Be sure you know that. Now, notice something else. Notice how most of the text is black, except a few of these are blue. Why is that? Each of these price levels that's revisited by price in this current RTH session is changed. The text colors changed from black to blue. Well, what a coincidence. Overnight high, overnight mid, overnight volume point of control, previous value high. Is that right? Let's just look. Whoa, looky here. Mid, value area high, POC. Isn't it cute? It's called statistics, and it's called data. It's not called guessing, wishing, hoping, Fibonacci, Schmibonacci, whatever the hell it is. And, if you trade those things, great. But I prefer to stick to just data. Now, this is suspicious behavior here as far as the price goes, in my opinion. These kind of big volume spikes at 9 o'clock, there's no report coming out that unless I missed something. Did I miss something? I don't think so. Let's see if somebody's chit-chatting about something over here. Lagarde is talking. Boy, she's been around a long time. Nice to have some stable input. I don't see anything at 9. So what is this all about? Who knows? Remember, this is Financial Juice. This is my investing.com. I'm not sure if I mentioned in the pre-market, both of these apps are free. You can certainly pay for them if you'd like, and they would be really happy about that, I'm sure. Here we go. Banking industry unrealized losses fall subsequently at 9. There's what this pump was. Now, if you pay the however much it is a month, I suppose you get this squawk box stuff more up to the minute. I don't find a problem with that. And I try to keep the stream accessible to everybody. And no secrets. Everything's completely transparent, just like my setups, my homework, my statistics, all of that. I don't think that there's a reason why, seems to me that the only people that do that, secret this, secret that, I don't do this, proprietary, something else, they're trying to sell you something. And that's exactly not what I'm trying to do. If you want to send me money, I'll be sure to take it, of course, but, I'm not trying to insult your intelligence by tricking you into a course. Yeah. Okay. I wish I was in Portugal right now, my brother. I'll tell you that. It's getting way goofy over here. and the goofy meter is, pretty expanded in the past few months. So that's saying something. Yeah. Let's get back to the business at hand here. I've had we'll talk about the statistics later, but I spend my weekends and my homework time away from the market. Here's my get my soapbox thing out about that. Now is absolutely not the time to be changing your trading plan, making decisions about this or that or something else. You should have all of this figured out, just like your bracket orders or multi-bracket orders, during your homework period, whether it's before the market or after the market. I do them in the evenings and stuff. I also get up at 6 and do stuff between 6 and 8, but not during the live market. During the live market, your exact job is to preserve your account by trading what trades, setups you've already vetted, applying risk management, and focusing on that business, trading. Not thinking about, well, maybe if I move this stop and do that something else and whatever your trade plans, I'm going to change this in my trade plan. Okay, fine. Make a note of that if you don't, got a memory like I have. And then after hours, you make that change, you vet that change. It's exactly what I did over the weekend. I've been noticing that I was getting limited signals on my initial balance trades because one of the initial balance statistic signal, which is the first one, I had it set so that, let's assume it's the IB high, that the open was below the IB and the close was above the IB. Sometimes we'd have a close on the IB. wouldn't be a signal. So away from the market with my backtesting software, I first run a backtest on all the days with the current rules. Then you change one parameter, one thing, and one thing only. And then you run the backtest again. And what difference did that make? That's the only way to approach this as a logical, statistical business of probabilities. Oh, look at there. Did we take the IB high? Oh, no. We got the IB 30, which I won't talk about at this moment, but no, we did not. And why didn't we? Because the initial balance high and low are what? Nothing more complicated than the high and the low of the first 1 hour of the RTH trading session. This price is, if this thing goes to the moon, Alice, this is going to end up tracking right along with it. Same way with low. At 9:30 Central Standard Time, the IB high no longer moves. Neither does the IB low. And at that point, the initial balance statistic becomes a thing. So there you go. I mean, think about it now. There's no reason to be hurry, scurry, blurry, all anticipating. I'm all paranoid. What am I going to do? I have 2 trades, which I vetted. I know exactly what they are. I know exactly what the rules are. I know exactly when they're going to become active, and I should start anticipating perhaps getting rule A, rule B, and the trigger. What a pleasure. You know, that's the way I like it. If you know Sunshine, Casey and the Sunshine Band. There you go. Or maybe that was Sly and the Family Stone. I think it was Casey and the Sunshine Band. All right. So, welcome to the stream. And, it's not, your input is greatly appreciated. So are your subs and likes and, that's the purpose of the stream is my virtual trading journal. I see capture video, what's on my screens here. My voiceover, this consistent, annoying, perhaps narration of mine is the only way I can get what I was thinking into the recording. I stream to YouTube because it's an added layer of transparency and accountability, and because I can review the stream on any device. My goal here is to trade exactly the way I say, and I am 100% transparent and fully accountable. This is a live AMP account with my own funded by my own money. When I trade, it's graphed and plotted right here in real time. Let me show you something here. Okay. Here's a snap from last week, and it'll look just like this. Entry. T1. Break-even line is the green boy. Stop. This is Boomer being a dick for a tick. Look at this crap, huh? There's my T2 target. This is 12 ticks. This is 48 ticks. This would be 60 ticks positive. I thought I was going to be clever and grab another couple ticks down here by the RTH low. And what happened? I got salt pounded in my backside and took a stop. I never moved my stop away from away from entry. I will move it. And what I did wrong here was not trail it up with the movement. But that's beside the point. What I'm trying to show you here is how the trades are transparent and fully plotted by Bookmap. And then when every trade is over, I open this trade statistics up, which has everything there is about the trade to the millisecond entry exit and all the other data. And that's it. Because stop and think about it. This is my virtual trading journal. my virtual trading journal. Who am I bullshitting? Me? You know, how stupid is that? Okay, we're doing the dipsy doodle with the yellow brick road here. I'm getting dizzy just watching this thing zoom around. Remember, the yellow brick road here is nothing more than just a continual history of where the POC has been through the day. Now, Antonio will remember in the days when I used to have a 5-minute, I used to keep the times line on 5 minutes, and I would continue to track the migrating POC with these flags like this. I did that because as the 5-minute time rolled along, obviously the yellow line, the IB or the POC lines would trail off to the left, disappear off the left of the screen, and I didn't know where POC had been. So I had these flags here to keep an eye on that. Then I realized, well, here's a better way to do it. And that's Blue Boy. I assigned Blue Boy the task of staying in view all the time, and I can see exactly what the POC did. And I don't need to throw these flags on here anymore, which kind of, confuses the issue down here with the statistics, I think. Remember, this is just a work in progress also. So here we are. We've pushed the IB high up to 89. We're down at 46. 40 handles wide on the IB. Been wide lately. And once again, the initial balance is not set, so these will continue to move. There's a statistic that Rod, trading colleague of ours, and we all got together, I think, in TLab, and then we ended up in Statistic or wherever. There's a statistic he determined, which is referred to as the IB30. What that says is that the high or the low of the first 30 minutes, in other words, this back over here, has about a 90-something% probability of being exceeded by the high or low in the second 30 minutes. And guess what? There's the high of the first 30 minutes, and there's the high of the second 30 minutes so far. So yeah, IB30. It's not part of my vetting, a vetted trade, so I'm only taking my one or the other of my vetted trades. It's not one, but there's a lot of them. There's a VPOC migration. There is any kind of a mean reversion trade, which is outside in. Outside in. Lots of setups. VWAP to VPOC. I'm just trying to think of some of them off the top of my head that come out of the TLab or wherever else. So, yeah. I'm focused on the initial balance trades, and what you ask, are they? Well, good question. Remember, the initial balance is the high and low of the first 1 hour. It's now 9:14. When's that going to be active? 9:30. So we have 15 minutes. Nothing to do except watch the market. Anticipate. Okay? What does the IB statistic say? Well, it's pretty phenomenal. Absolutely. And here's the homework study. Here's our open time. Look up here. 97.8, 97.6, 98.5, 97.9% probability in all four open types that the IB high or the IB low will be revisited by price at some point in the balance of this RTH trading session. That is the initial balance statistic. Pretty phenomenal, eh? In today's world, it's 2.4% probability that neither one will be visited. There is a 31.1% probability that they both will be. Nobody's 100%. So there is always, it is just a probability. But that is the statistic. Only available, or only a thing after 9:30. And there are a couple of trades associated with that. I had to step away, sorry. And those, the trades which are associated with that are the IB continuation and the IB failure. And there is one each associated with the IB high and one each associated with the IB low. So those are the four trades that I have vetted and that I am anticipating and looking for now. If you notice the profile or the context of the session so far, it's fairly balanced, isn't it? Well, a balanced profile, rotational, outside in, would suggest an IB failure because it is essentially a mean reversion trade with a fancy name associated to the IB. Price comes up, trades through the statistic, can't get any more horsepower to the top side, pulls back. Now, we don't have, this would not be a trade of interest to me at all because where's the POC? There's no meat on the bone here. 3 points, nothing. Okay, but that's the IB failure. The IB continuation trade, as you might have guessed, we trade through the stat, we pull back, nobody cares about this down here, and away we go. Typically suggested in a directional kind of a day. So there's that. Now let's jump back over here and do the world famous top secret magic. Ooh, what's this all about? Now you ask. Well, this is my backtesting tab. And these are the rules for my backtesting system, for my trading system on the initial balance. So there's a set of rules here that'll do an IB continuation or an IB failure associated with each of the initial balance, high or low. These rules don't, typically I use them to backtest. What I'm going to do this morning, in this chart, right at the moment, has nothing to do with anything. These levels and the price signal markers are just indicators that I've coded for this chart and the trigger chart. They're not part and parcel of the trading system. However, they accurately reflect exactly the levels as used by the system to trade. Now I do one thing extra different now, these last few days. What I'm going to do is, also, this is simulated. What's going on right here is going to happen only within the simulated IRT account. Has nothing to do with my live AMP account. So when you see a trade plotted over here, that's not gone to that's not gone anyplace other than right here. What I'm doing now is I am visually confirming that my rules are happening when and where I think they should, and when I have a trade trigger here from the system, I manually take that trade over on Bookmap without discretion. Okay, so at the moment, the trading system has nothing to do with this chart. It's just plotting along, and these lines will show up at 9:30, and they've got nothing to do with anything. What I'm going to do at this moment is I'm going to send this system to the chart. And I'm going to get rid of these two lines because this is the two target lines I use when I'm backtesting, just to confirm where they are. And there we go. Oh, why didn't something show up? Because it's not 9:30. We haven't received a signal for a trade. Once a trade is signaled and, simulatedly taken by the system, they'll plot over here. These pullback and continuation zones and the triggers are not visible yet because it's not 9:30. That's all. This is real simple. And that's the way I like it. That's the way I need it, actually. So there we are. That's how this is going to work. One other thing now. At 9:30, those lines will start, the pullback and trigger and all that will start plotting. And the labels will show up over here and as we go. When that happens, I have set it up so those levels and lines will push to Bookmap. I'm thinking over the weekend, but I didn't do it yet, of creating a second data export and getting rid of the price levels over here, except the IB, and only focus on those levels and zones in the system, in the trading system. But we'll take that another. We'll see how it works out today. It gets a little busy over here with all these lines. Another thing I can do that I thought about was just where'd that go? Oops, wrong thing. Sorry about that. Let's turn off the heat map, which does that. Kind of clears things up a little when I'm really getting screwed in thinking about trading. By the way, that's how you do all that. I've also experimented in replay mode with putting the candlesticks on over here. Now we've got 10 minutes till it's 9:30. So I can feel comfortable showing you guys this. Candlesticks. 1 minute. Okay, there they are. So those are 1 minute candlesticks. If you wanted Bookmap to be a candlestick chart, and try to see if these, once the pullback and continuation and trigger zones start to plot, how they compare over here. In other words, replicating what's going on in this signal chart. Haven't figured out whether that's a help or not. And I can also turn off this last price line and just have a candlestick chart. And my levels and all that, and heat map, whatever. I don't know. I'm just goofing around here. Typically, what I do is this. I trade it like this, and I don't have the candlesticks on, and stuff I was playing with over the weekend. Okay, we've got a couple of minutes here. basically 5 minutes until the initial balance statistic is a thing. Ooh, it's alive, baby. So there we go. Look in and hang on. What can I tell you, huh? I'm going to I didn't get it down to the close. Interesting. I don't consider that a gap. A lot of people do. I consider a gap range. In other words, if we'd have opened up here, that would have been a gap to me. I consider a gap previous range to current open, or to the current chart open. Some people call this a gap. There's the close, and there's the RTH Open. Shoot your best shot, whatever works. Whatever works makes sense to you, and you're good with. That's what you should do. Absolutely. I did some statistics and backtesting over the weekend and made a change to the rules for the trading system, based on things I'd been watching. So we'll see how that works out today and talk about it all later, I guess. Well, uh-oh. Where'd Blue Boy go? That sneaky devil. There he is. So we are essentially trading them up, huh? And something to notice, look at the profile. Just, look at the profile here. Profile over here. What do you notice? We have auction came to a conclusion. There's taper at the bottom. And what's the top look like? Flat as a board. No excess, no taper. The auction didn't wind down as I would expect normal. If you see what I mean. And I'm looking at the profile here. And of course, boop, boop, boop. And I don't do all that W and ABC. I don't know all those things. So maybe if you are good at that and it works for you, great. But what I'm looking at is a profile. It's flatter than Kelsey's nuts right here. And it comes down to a nice point and taper at the bottom. So they need to go, and I don't think so. They just couldn't get it any lower. Nobody was interested to buy down here or sell down here. Now they're up here. What are they going to do? Same thing you can see on the profile. And I'm not saying what it's going to do. I'm just observing this. And we're going to have that initial balance statistic in about a blink of an eye here. Exactly 30 seconds, to be honest with you. And this is a real interesting spot. Typically, I would say don't trade in anticipation of the statistic. And what I mean by that is at 9:30, this is a live statistic. Don't go, oh, we're going to take the IB high, we're above the POC, we're above blah, 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 and get long. And then get a dumb look on your face when this happens right here. So there's the statistic. The IB is now a thing. There's the IB high. There's the IB low. They are going, ooh, they're going no place. They're going right there and right there. And here's what I mean about the stat. If you were right here and you thought, oh, we're going to take that high and got long, you're stopped out. If you're using the same brackets I do. And from my point of view, there's no meat on the bone here. There's no range requirement. Really. And there's 1 point high. I try to keep these price ladder at 1 point and keep Blue Boy on duty. And there I feel like I have a good sense of scale and the complete context. Are we going to take the IB high? I would think so. I mean, how much higher we got to get, right? We're close. And flat top, remember? Look at all this. How many times is that? 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 times. I would guess we're probably going to poke through there. But that's a big but. But a lot of people thought so here and here and here and here and here and here and here, you know. However, now we are in the initial balance. Trades are a thing, so let's do a quick check. I'm green. Got both. Got the package. Ready to trade. Off. Okay, here we go. We haven't taken the IB statistic yet, I might point out. I'd say so, but you never know. Now I want to see something over here. I want to get to my... Okay, over here we have 9:30, and here come the levels. A word about these signal markers. Remember, these are just coded in this chart by me, not part of this signal, not part of this, and not in sequence. Very definitely the trading rules are in specific sequence. I'm not going to bother trying to figure that out over here. When a B is triggered, boop, it shows a B. There's a trigger chart. There's a trigger. But what? Well, there's no A. Now we've got an A. Now we have the A. We've just taken the IB high. Didn't need to even look at that. I can see what we did. What do we need now? Now we need a B. And then, now it has, something isn't right there with what I thought. Oh, yes, I can tell you exactly why. No, that isn't right. The change I made, this should have stuck as an A, I thought. I got to see about that. Now, if you're curious why there's not an A signal here, because the previous signal bar, the previous to the signal bar is not in sequence. It's got to have an open lower than close. In other words, we want to be trading up into the statistic, not falling away from it. This is just my thinking, my logic, right? It hasn't got anything, not written in sand any place or anything else. But that's why there's no A there. And do I need to work all this out? Yeah, probably. I'll tell you something else I need to do here is get this over here where I can see it a little better. Come on, man. Don't be this way. Recalculate, get your shit together. IRT. This is nonsense. Notice these signals and stuff, the labels. Guess what's over here? Signals. Zones, triggers, zones. And we don't have an A here yet, and I need to look at that rule. These are changes I just made change I thought I made last night, so I gotta see exactly what's going on. Are you ready to move nicely now, or are you gonna be a pain in the butt again, some more, continually? I don't want doom something or another in a video. Go away. I've never played a video game in my life. That's all my daughter does in her waking moments. Well, this is kind of frustrating, huh? No, it's not, because I haven't got a signal. I don't have a trade. Easy. Easy peasy. But what have we done? Notice? Oh, excess. Now it's not flat anymore. Now we go up to excess on the top. That's a completed auction, or so far. Well, doggone it. If I was a clever Trevor, I would be able to put the signals, code the signals directly into Bookmap. Wouldn't that be sweet? Then I could just, or, figure out exactly how I can confidently trade with IRT. And after I'll open the rules and we'll go through the rules together and see exactly what I was thinking there. But now we're trading. There we go. It's entered a trade now. Right there. And so it's got a rule that this thing didn't pick up. I know what I did wrong. I know exactly what that is. Son of a bitch. I know exactly. Boy, I talk about stupid. Well, if we get down to our trigger zone again, I'll get long. I am sorry. I just realized why I wasn't seeing the signals as they are. You can see that the trade is fired on the system, but it has not gotten back to my trigger over here. Damn it. Something's going goofy. I know what it is. I know exactly what I did wrong. Oh, you see the trade by the system. You're going to die laughing when I tell you this one. And I missed the trigger over here because I'm standing here trying to figure out why I'm not getting that A signal. Well, I know now why. And I missed my trigger right there. And I should be long, and I would be now almost 10 points in. Son of a gun. Yeah. Just amazing. Huh. That is really frickin' annoying. It's pretty funny, but not really. I was so busy doing all my back testing and everything last night and my rules, and you'll notice that my rules are trading exactly as I've made the change. Why aren't the signal markers there? I asked myself, because I didn't change. Remember when I was saying these signal markers and these levels are just coded within this chart? I didn't change that. Didn't even occur to me. Stupid. Okay. So now I'm going to have to make a couple of changes here, and yeah, I'll just put it over here and you can watch the market go by and the old guy can do some dumb shit. Wow, that's pretty amazing. So I'm going to take these. Can I do that? I think I can. Oh, if you want to watch this, this is how I set up stuff. So I had set this up for my last back test last night on a 1-to-1 risk reward ratio. So here's stop, T1, T2, and the triggers. And this needs to be 48 to be my original 2-lot bracket as we set up this morning. So stops 12 ticks. T1 is positive 12 ticks, 48 ticks. There's no trail. 2, 2, 2, 2, 2. And there's no plus. So we're going to go like that. We're going to go like this. What am I doing here? We're going to go like that. We're going to modify the rule. We're going to save it. The change I made is in place, no problem. What I changed was I used to have a rule was that the open was lower than the IB high. And it used to say the close was greater than the IB high. In other words, in order to have a statistic here, I need to have a bar open below and close above. And what I've done now is change it to the high. And that's what I didn't change on my charting graphic signal markery things over here. And that's why there's no A. Stupid. Stupid. Didn't even think about it. Well, I mean, the important part is I was backtesting, which has got nothing to do with this chart. I just run the backtest here. So, yeah, I'll think about that. But now, let me just point out to you, if I were long, wouldn't this be a pleasant turn of events right here? Yeah, it would, wouldn't it? We'd be long 12 handles. There's T2. Boom, bitty boom. There's a full trade. Oh, man, irritating. Remember, simulated. This is only happening in IRT. This is not going anywhere where money's real on this particular system chart. This over here is live money, and I'm in no trade. I was busy having my head up my ass as far as the my work last night. Oh, man. Son of a gun. And there we go, you know. Well, and here's the trade. Signal, T1, T2, 60 points, 60 ticks. Everybody's happy. Trades off. Man, oh, man. And I'll show you what I did wrong if you're interested, so you don't make a similar mistake. These are the signals that I have coded up for these various lines, right? And these represent, for example, there's the IBC strat signal. So that's the same as the IBC statistic, which is this rule. Here is the copy of the rule as a signal used over here. But when I change the statistic rule on the trading system, it doesn't change the signal. Football. Oh. So I'm not going to mess with it, or am I? IB high strat. Well, this is the IB high continuations here, so this would be the signal. And they look like, I don't want to get this thing too screwed up here, but in the middle of the trading session, but this is how you put this statistic on, and here is the copy of the statistic, and right there, this should say high and not close. So if I change this, which I've already said 1,000 times you shouldn't do during the session, save, close, apply, and there's an A. There's the A, and there's the B, and now, man. Oh, you know, isn't that disappointing? Yep. Now I'll do the rest of them later, but I wanted to just make that plain. That's why I didn't have the signal. I'm going, but why is there no A signal? Why is there no A signal? Because you're a dunce. That's why. Yes. That's what happens when the old guy's doing back stuff crap late on a Sunday night. And this right here is what happens when the old guy pays the price for doing that right here. Here's the trigger. Long. T2. This should say 60 right up here. Pleasure. Thank you very much. Thanks for coming out. And you know what? But you know how to look at it? Okay. The market is a continual stream of opportunities. There is no such thing as a missed opportunity. There's only the next one. What I'm happy about, rather than being all bummed about what I missed, getting all FOMO'd and monkey mind, I'm glad I figured out what the problem was. Okay, now I know what to do, and I'll just carry on. My son, I will carry on. And wait for the next opportunity. And the TLab, the joke is, you know, where are you in a trade? Nah, I'm at the bus. I'm waiting for the next bus. Same idea. But boy, that's a perfect trade. And Uncle Billy just, that old boomer missed that one big time. Damn. You don't want to do that. But, you know, probably a good time to discuss Monkey Boy. Your monkey mind, huh? We have evolution, you know, through the course of development as a species, we've brought with us successful wiring in our our responses and in our brains that were successful to our survival as a species. Risk reward, risk aversion, fear of missing out, wanting to be right, aggressiveness, assertiveness, all that stuff. And it's all completely bad for you as a trader. Because those are FOMO, fear of missing out, all of those things, which if you give in to them or you act on them, will probably, most of the time, not work out well for you. Now, they're never going to go away. You're never going to get rid of them because they're baked into your hardwiring for, your DNA for thousands of years. You're going to have an adrenaline bump. You're going to be addicted to dopamine until you're dead. But what you need to do as a trader, in my opinion, recognize that stuff, recognize FOMO, recognize revenge trade, recognize you're on a dopamine high, and don't act on it. Be an adult. Don't act on it. That's my approach to trading. The emotional side or the psychological side. I didn't take this trade over here, and it was a beautiful trade to both targets. Rather than getting all spooled up about FOMO and I'm going to get in here and jumping on this bar here to try to get some more out of it, I'm happy that I figured out, no, I'm not going to do that. I'm going to see, why didn't this work right? Oh, yeah, that's it. These signal markers aren't hooked up to the system, aren't part and parcel of the system. I already went through a long explanation about that, and, did the penny drop with me? No. I didn't even think about it last night because I was busy doing backtesting. There you go. Am I FOMOing? No. I don't chase. I don't FOMO because that's not good for me and that's not good for my trading. And so that's not what I'm going to do. Am I going to like good looking gals? Frickin' lutely till the day I'm dead. Or, pick one. Pick whatever you're interested in and, interchange there. Pronoun, adjective, whatever. Well, boy, oh boy. A classic setup that I didn't take. And when I realized that if you listening to the stream, I realized what happened. I was ready to enter the trade over here if we got back down, and I would have. If we got back into this trigger zone, I would have taken the trade. But I'm not going to do it at any other point. Oh, this is close enough. No, it's not. No, it's not. This is a trigger zone. Here and here. This is the pullback zone. This is a continuation zone. Click as a flipping whistle, boy. They just worked out right as I had have backtested them to do. And I'm glad. I like the new, I know the reason I changed the rule was I, stand here all day doing this, narrating, right? And I noticed I was missing a lot of signals. Typically, what was happening was because of the way the rule was written, it was, let's just pick, let's say this was, where'd it go? Here, let's say this is it, okay? The open was lower than the close. Well, sometimes I would have the open equal to the close, and that wasn't happening. So does that need to be changed to greater than or equal to? You know, those are the kind of nuances that you need to get into after you finally got something worked out with a statistic. And now I need to be very careful about what I think contextually with the trade we got going on now. Are we going to pull back, carry on? Are we going to pull back and fall out of bed? That's what I don't know. What would I think about that now? What would I think about that? Well, what I will think about that is if a signal is given in the system, I'll take it. And I'll be forever disappointed that I had my head up my ass and didn't take it over here. But I wasn't anticipating the signal. Had I seen this fire, I'd have taken the trade, but it was too late because I hadn't seen the A. And so I was not, I wasn't keyed up to fire. Which is fine. Here's a double something, a tweezer bottom or a double something or another. Is disappointing though, isn't it? Certainly is. Don't need that gap flag anymore. Yeah, I got to stop and think about whether I want to have these price levels, the price line, just for the trade system. These levels, these flags will always remain. The flags here, as you obviously have figured out, and the price levels are the same. It's just a line to draw my attention more to the level and the flag. They're both driven by the same exact data from IRT, exported at the same time. I'm disappointed about that, boy. That's stupid. I'll tell you something else I wish they would do here, but I'm sure they're never gonna. I wish they would just have a button you could set this to whatever, if I want this 1 point high, I can, like now, I just hit the button and there it goes. Instead of all this up, down, back and forth and stuff. What happens here is as the range expands, it tries to keep the range in view, and then it's all scaled in or out. Doggone, boy, that is really disappointing, isn't it? Mm-hmm. I'm going to have to very definitely get those signal markers straightened out this evening after the market here. I might be able to do it while I'm standing here talking, but that's not a very good policy. What's our context? Here's Blue Boy. What are we doing? Well, we tested down here and that didn't look too good. We tested the open and we haven't looked back. Did we pull back? What's this? This is a pullback. This is a continuation zone. And so what? Here was the trade. None of these levels or lines mean anything anymore. And you know what? I guess goes without saying, you know what the liquidity is. These graphic representations here are just a graphic of what's going on with the book, the resting liquidity. Oh, boy. Boy. I don't think... I suppose there is a way. I'm going to say, I don't know if you... Bookmap, excuse me. The story that I had heard about Bookmap long ago when it was first came out was that it had been developed as a in-house algorithmic trading platform. And I guess they figured out that they could make a hell of a lot more money renting it out to all the retail dorks out there. Which means to me there's got to be a way you can programmatically trade with the thing, I would think. Wouldn't you think so? I would. There we go. New highs. Oh boy, I'm so excited. Oh yeah. No heat, nobody left on third. This could be the runner from outer space over here. Let's talk about that, I guess, since we're not in a trade or have the possibility to be in one. Oh, look at us go. What would happen? We're entered here for long. We get this risk neutral scale, and then what? Well, a form of trade management is to keep moving the T2 out ahead of price action and trailing up. Now, you trail up, and you get taken out. You're not in the trade anymore. And unless you're a rearview mirror trader and an internet guru, then you knew very definitely that this was going to happen, and you trailed from here to here, which is obviously not the case. Yeah, I clearly missed that trade. Boy, that is... But I'm not going to enter a trade if I think there's something wrong. And I didn't recognize quickly enough why I wasn't getting the signals on the chart. And when the trigger fired, it took me by surprise. So I don't know. I wonder how you can trade with this. Let's look at something here. Let's look and see if there's some sort of add-on. Well, there's a Python API, so I guess you could set up your signals with Python and then push it across. There must be a way to automatically trade with Bookmap. I mean, must be. I tell you what, it must be a way I wouldn't wish I was in this trade. Well, okay. Definitely making the move. If you're on that long, just keep pushing your target out and trailing. That's my advice. This is a classic example of let your winners run. Or I should say, a classic example of an opportunity when you could let your winners run. Now, depending on what your rules are set up as I said before, you scale here. Well, this is a risk neutral T1 right here. So then, really, I don't think it would be valid. You could conceivably say that this was a valid place to start the scale. But that's rearview mirror, man. That is completely internet guru talk there. I'm just theorizing. I'm trying to think of it from my point of view. Well, here we go. Okay, what are you going to do now? How are you going to manage that trade? You're going to scale up you're going to trail to here. And then you're going to be stopped out. So, yeah. Woulda, shoulda, coulda. That hindsight, boy. I am really annoyed with myself. What's happening in signal world over here? Let's look at that little thing. So there's our trade as plotted by the system, as taken as had this now. If I had this set to the MES and the account set to the live account, ARC account, this would have been a trade. That's all that has to happen for IRT to be doing this. Is that a little nerve-wracking? Yeah, it is, and I'll tell you why it is, because when I first, I don't know, a month or so ago, when I'd opened this AMP account, I first went with paper trading, obviously, to make sure all the setups were right, and passwords and all that kind of stuff. And I had IRT looking at the same account. I went long on Bookmap, 2 lot, risk neutral package. IRT said it was short 2. The price action traded up to the risk neutral scale, took 1 off, sold 1, right? Because you're long. IRT said it was short 3. I'm going, what the hell is this? And I haven't figured out why that happened yet. And I certainly would be apprehensive to let it trade for me under those circumstances. And I still don't know what to think about that. I'm also just thoroughly pissed here. That's double right there. So far, we've doubled this trade. Well, what is it? What dip. What did we do here? Well, we're at say 688. Yeah, 30 handles. 20 handles. Magic. 20 times 4, mind you, that's 80 point ticks. But we're plotting along just Jim Dandy over here. I could probably... Now remember, there's a signal for the continuation of the IB high, failure of the IB high, and similarly for the IB low. So those are the signal changes that I'll need to make for this thing to be firing like over here. Look at us go, son of a buck. That is pretty darn disappointing, boys and girls. What are we doing? Well, we're squeezing them, obviously. We're squeezing these kids right over here. I believe. That's my story, and I'm sticking to it, by golly. Is this? There we go. Yeah, that's pretty darn annoying, isn't it? Pretty bad way to start a holiday week on a Monday, a holiday week Monday. Would have been a lovely little trade to flop on there and be out well, and just standing by waiting for the next one. which is highly unlikely given the market structure that we're having now. We're basically price discovery here, I guess. Directional for sure. And the only trades that I vetted, remember, are the initial balance trades. What would I think if we came all the way back down here now? Not nearly as warm and fuzzy as I was right over here after we're doing this. You know? Gosh, that's disappointing. They're going off the map over there. Wow, man. Aren't I glad I missed that? Oof. Well, what did we do? Going to the moon, Alice. We're going to the moon. Whoop. Well, look at him go. Bah humbug. Hmm. Something's still not right here. No. So I straightened out that rule here. Had that fired as I expected it. There's the B. There's the trigger. Boom. Rearview mirror, baby. At least this is a real-time live signals being traded. Come on, get away from here. Real-time live signal. And this plot's, well in advance of now, so no argument about it. But this is why I was not on the trade and why I was so surprised when that fired. Stupid. Not really. And here we are in another situation with a flat top or a poor high, one tick. I'm guessing this is not going to quit going up for a while. Welcome to the stream. Drop something in the chat. Thumbs up, subscribe, send money. Well, you know, whatever works. So we are at the live ARC amp funded account on this side. IRT charting. And IRT trading system test simulated here within IRT, having nothing to do with the AMP account. Beautiful trade, right on schedule, right on everything, on all the signals working fine. And donut boy over here. When I made a couple of additions to the signals last night in my backtesting work, didn't even occur to me that the trade markers, the signal markers, and these zone here, these are all independently coded as indicators and signal markers here in this chart, and I didn't even think about it. So when this signal fired for the trade, I was on my back foot because I wasn't expecting it because we only had a B and a trigger. I had forgotten to add the changed rule for the A signal, which is the initial balance. Stupid. I've done that now. But, you know, as the horses go over the hill, let's slam the barn door, shall we? Hey, but it's perfectly fine. Now, the way I'm working this now, in case you're new here or just joining in, again, this is simulated, and I've got it marked every place I can think of so that I be sure and not have IRT send in live trades to the AMP account. And the ways you can do that are, this is just a note to confirm what I've selected on the account. And this right here, this quote page needs to have a symbol in it. If it says 0, it will not trade. IRT will not trade. If it has MES Z5, it'll send a trade. It has the ability to send a trade. If this has the instrument or the symbol and the account's on the correct account, it's going to be sending trades. So I don't want that to happen. As a result, then, all of the zones here from these signals are pushed automatically to Bookmap. Here's the continuation zones, trigger zones, the IB high, pullback zone. And I didn't take that trade because I wasn't expecting it. And it was clear, and here it is perfectly, you know. The IB statistic, the continuation zone, the trigger, and there's the long. And if you want to be an internet guru guy, I can say, well, I knew it was, you know, I got long here, I scaled here, you know, which of course unless you're psychic, you had no idea what was going to happen here. If you were managing the trade by scaling up behind the swing lows, well, here's a swing low. Here's a swing low, or here, and you're stopped out here. So, you know, that's internet guru country. I'm not going there. And this is, so at this moment, it's 0 trades, 0 P&L, 0 positions, 0 volume traded. Live. AMP. What I would have done, I was going to show you that, I believe. When the signal for the trade fired, I enter the trade manually with Bookmap and my mouse on AMP, on my AMP account, without discretion. If it goes long, I'm going to get long. And when that signal fired, I was taken back for a minute, and I thought, oh, what's wrong? Now, I don't want to go over here and take a trade quickly and then try to figure out what's wrong. So I'm gonna defer to sit on my hands and figure it out and then move forward, which I did do. So that should explain the story here, the discrepancies, I hope. And that's why the stream is completely transparent and accountable. I take no trades off the stream. It's very clear how the trades are graphed or depicted on Bookmap and on IRT. And, you know, if there's any question, well, oops, I think I've thought of everything. And stop and think about it from my point of view. This is my virtual trading journal. My virtual trading journal. Who would I be trying to bullshit? Me? That doesn't make, you know, come on. Mirror, mirror on the wall. That's not the point. I made some pretty interesting revelations with the backtesting yesterday, over the weekend. Unfortunately, I didn't think about updating this trigger chart or this, the visual analysis of the system, but now that that's under control. Some pretty eye-opening revelations with the backtesting. I was surprised. And I still am kind of surprised. I still want to verify it again. We'll talk about it later. Okay. What are we doing now? Let's check what's happening in random world over here. I'm a random girl in a random world, I guess. No real, this is as close as we're going to get to a recognized random event here. All this stuff going back and forth and up and down about Ukraine and whatnot, I would be pretty cautious about what may drop out of the sky. And maybe nothing. No, there's nothing on the calendar, so it's all up to who says what, who tweets what that nobody was expecting. That's kind of the way that works. That's kind of how that works. Gosh, what a lovely trade, and right by the numbers. Bing, bang, boom. No heat, nobody left on third. Wow. That's the kind of thing you need to take a screenshot and review later, however you go about backtesting or replaying or whatever. Here we go with the flat top again. We were discussing earlier that I fully expected this thing to go up because of the no excess on the top. Here we go again. Here we go again. Will it quit at some point? Sure will. At what point? I have no clue. Here's the day so far. Here was the big Thursday sell-off, so maybe they're still squeezing these shorts. Yeah. Couple of three different ways. And I'm not saying I know the right way to look at these kinds of levels and this kind of trade action. How many times we banged on this level? Well, there's one way to look at it is an analogy that I liked a long time ago. If you take a bucket, you beat on the bottom of the bucket with a hammer often enough, you'll knock a hole in it. Bang, 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 hole. The other side of that coin is, well, all the retail folks that can't resist themselves from picking a top or, shorting up here, and where are their stops going? Right above that level. A lot of fuel there. Let's see what happens now. Well, there we go, through the level. And stops, 207 of them came out right there. Now we're getting some excess again on the auction. Am I going to short? Nope. Long? Nope. Is it a structured trade? Nope. I got nothing to do till we get clear back down here, and then I would have to stop and think about it. Frankly, I will take the trade. First, let me say this: I will take the trade as signaled. However, I won't be near as warm and fuzzy about it as I was over here, because pull back to here. Well, have we explored up far enough, and now we're going to look below? You know what I mean? It's not. I don't think the probabilities of that trade being successful would be as great as they were early on. So I'll take it, but I won't like it. I'm trying to eliminate or reduce as much as possible any discretion. Obviously, when the system is backtesting, it's backtesting the rules specifically. There's no discretion involved. And if that's the way your statistics have developed, and why you're basing a trade in the live market on those statistics, I don't think it makes a lot of sense to start inputting, inputting a bunch of discretionary variables that weren't in the backtest. Doesn't make a lot of sense to me to do that. And I'm sure getting disappointed with. Oh, I'm just really disappointed that I missed that trade. I'd like to get my business done in the morning. I don't know why, I just have a general feeling it's more conducive to successful trades. It's more of the participants are doing business and have things to do, right? And then it can come down, the closer you get to noon, well, there's some jork is going to try to jerk it around or who knows what. I'm not saying I do take the signals when presented, but I'm just telling you how I feel. A monkey boy feels. What happened? Am I rich yet? Notice that we have a VPOC migration right here in IRT. Here is the flag, and nothing going on over here in Bookmap yet. I don't know what is going on here, but something fundamentally wrong. I may actually try to roll this back. I don't know what to do. I'm trying to think of what the problem with the rollback. This is what support has suggested. I don't know if there's any functionality that I have now that I would be missing out on. I don't think so. And you have to be real careful about that. A colleague of ours, trading, one of the trading group here is upgraded to a beta over the weekend and discovered, much to his chagrin, that the Bookmap statistics doesn't work. Isn't available yet. Well, I try to make a point of always moving from production to production, latest production. To avoid that, because I don't want to, like now he's all upside down. Oh, what the hell am I going to do? How am I going to do? Where am I going to get the stats, update my static thing, all that stuff. Similarly, I'm wondering about why I'm questioning rolling back to a previous version. Is there something I'm using now that would not be, supported? And I don't use much of Bookmap, as you can tell. I mean, there's, balls and bullshit and stuff going on. Some of the people, I'm not saying that, I suppose this is a good time to mention this. This stream is my virtual journal, trading journal. And it is by no means intended or implied to be my way or the highway. This is what I'm doing. I'm completely transparent and open, and I would love suggestions. Well, dummy, that's a dumb. Why are you doing that? No problem. But having said that, of course, I mean, sometimes people post stuff in either TLab or sometimes in another in the Static, which is a group where we trade together, and it makes perfect sense to them, and they've got all the bells and whistles and bid and ask and all the stuff turned on in Bookmap. I can't even see the price. Makes sense to them, good for them. Or like VWAP Jesus would have 25 or 30 anchored VWAPs going on his chart. I couldn't figure it out. Well, good for them. They can. I'm not saying anything wrong with that. I'm just saying that I have to keep it as simple and straightforward as I talk about in the pre-market as I can. Simple ABC. Price action, price data, levels, probabilities. That's as far as I've gotten with it so far. Yep. Well, welcome to the stream. Hopefully you weren't around when I flubbed it. I didn't flub anything, actually. I did not. I missed this signal and this trigger for long, which is in my trading plan. And it is right. I have evidence there. It's right. There's the trade signal. And it's a long story. You can look back in the stream. But what I have done through the night, through the weekend, was change one of the rules in the setup, in the trading plan, in the trading system, around the initial balance statistic. And I forgot that the signal markers on this chart are completely independent over here. They represent exactly originally the rules, and you can see right up here that here's the IBC stat signal, and above it is the IBC stat. I didn't update the signal for the change that I had made in the system. So the system fired right here, and I'm going, wait a minute, what happened? There's no A. What I need is an A, a B, and a trigger. Boom, boom, boom. Perfect. I got a B and a trigger, and I'm going, what? Why did this go? So I'm trying to figure out what happened with the system, and what happened with the system was on this side of the this side of the monitor, which is typically what can happen. And I don't chase them, and I'm not going to FOMO in after something. So I did immediately jump back to the chart, and in anticipation of another pull down, for example, pull down, if this would have pulled back to here, I'd have been on the long, but it did not. So there you have it. And this is 60 points. And let me point out one thing in case you're clever with math and you're looking around and you see 48 ticks down here. This trade system indicator from IRT was coded long ago by Chad Payne, and it only calculates the total ticks based on the final contract. It doesn't add the first T1. In reality, this would be 60 ticks, not 48. So there's that. And now we'll get back to the business at hand. And what's going on over here? Excuse me. Micro composite, high time frame chart. My version of a high time frame is RTH session only. These are daily candlesticks. Wherever price overlaps, I draw a volume profile around them, which generates the high and low volume nodes and the micro composite VPOC. Now, here's something to notice if you're trading. Some guys I know are trading, they're watching the ES and trading the micro. I'm not sure why. Nobody's explained it to me yet, and I've asked them. Here's the micro composite VPOC for the micro ES. MES. This is the ES. Here's the micro composite VPOC for the ES. Quite a big difference in my opinion. I can't think of why you would want to watch one instrument and trade another one. Actually, here's another good thing to notice. 895,000 contracts traded so far since 1700 last night in the ES. 1 million contracts have traded so far in the MES. Quite the big difference in volume, huh? Obviously, due to the price difference and the tick price difference, and the fact that a lot more, I guess, retail people are trading it. Yeah, I guess. And that, of course, doesn't have anything to do or explain at all why somebody would watch one and trade the other. In Bookmap, and the reason I keep, instruments open, there can be correlated instruments, the NQ to the ES, for example. But I don't know why you would want to trade the MES and be watching the ES. I haven't figured that one out yet. I also question why Bookmap is not getting the... well, I can tell you, I know exactly why. According to the volume profile setting, to do with perhaps the open issue, we've got 5,942 contracts traded down here at the POC per Bookmap. We have 5,493 up here per Bookmap, but in reality, IRT knows this is the VPOC, and it doesn't have a problem starting at the correct time. Now, can I reset? Well, let's try this. Let's try this. It'd be something fun to do. Let's see if this whole son of a bitch goes crazy. What did it do? 93. 59. Still the same. 600 contracts different for some reason. It's between you and me and the gatepost. I always look at, maybe wrongly so, but I always figure IRT is the gold standard for my charting and levels and stuff like that. Especially now that that Bookmap seems to be pretty. My Bookmap seems to be inconsistent and not very dependable in terms of how tough is it to reset this thing at 8:30 Central Standard Time, which, by the way, is exactly what I have set here. Boop, boop, boop. At time. I've tried session start, whatever. I mean, I think it's pretty straightforward, and for years it worked perfectly well. Now it doesn't on my stuff. I don't know. Lucky me. Lucky. shit. I think it was on mute. What I was saying was this auction just doesn't look complete. It's like somebody chopped the top of the profile off. What have we been doing daily? We opened and closed way the hell down there and then took it all the way across up here and back. What does that mean? Nothing. It's just an observation of what we've done the last couple of sessions. What's Blue Boy up to? Well, if you had to guess and just look at one chart, what would you say the context for the day is? Kind of up, isn't it? It's kind of long. That's the context we have going on it that I can see. Geez, 11:20 already, 11:16. Ridiculous. I don't know, maybe. Pretty quiet and boring. I missed that trade because of stupidity on my well, whatever I did. Missed the trade, missed the setup that was signaled and didn't take it, and that's disappointing. Here. That's the trade the signal took and system took, and I wasn't ready for it because I had modified the A signal on the system and had forgotten to do it on this chart. So, snooze you lose, dummy. And I don't know what news is coming up that you're worried about, but what news do we have upcoming here? Let's just look. I guess we got the notes and we got the notes at noon. I don't see what other news is cooking over here. Nothing on this docket, actually. I wonder when they're going to get around to revising that non-farm payroll for September. That was the biggest, pretty obvious manipulation I've ever seen. Oh, well, maybe, yeah. Yeah, okay. This week we have a lot of them actually. Yeah, we got core retail, PPI. Yeah, tomorrow they're starting to get back into the swing of things. Hopefully the numbers will be real. If this bunch of fellows back in DC play with these numbers to a point that they ruin the credibility of our reporting, that would be a huge problem for our markets. That's one of the reasons we have the market we have. The good way, the way I approach numbers and releases is to be aware of them and be flat. If I haven't got a pre-vetted plan or strategy to trade the market, to trade the number, I mean, these guys that, throw one either side of non-farm payroll and hope they don't blow up their account. That isn't exactly the plan I had in mind. I have specific setups which have nothing to do with a number, in that they evolve around the initial balance. And that doesn't happen until 9:30. And so I'm a spectator until then. What a pleasure. This has gotten me spooked. Not spooked, but that gives me pause right there. There's exactly, come on, Alice. There's no excess here. Flat as a board. Notice the taper at the bottom. Auction concluded. What's happening up here? These spidey senses ought to be tingling there about that one. And now we're banging around over here now. I was on the wrong chart, sorry. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. 10 pokes at that top. Somebody's sitting up there. They're not making their position very well known. We got 707 of them sitting at the 20 handle. That's, substantial number, and they've been in the market since 9:39. That's just about exactly when I had the signal for the IB statistic trade. There we go. Finally, Bookmap decided it was going to move up to where IRT's been sitting for quite a while. Well, it's what time now? It's 11. Okay. IRT's been sitting up here since 10:15. I have no explanation. Other than somehow or another, obviously this POC is simply reflects the price at which the most contracts have traded so far in the session. Now, that last bit is real important. If it thinks the session was a different time than IRT or than the rest of my systems, it could be calculating exactly correctly. And that's why I'm concerned with the fact that the volume profile is not resetting. I want all of my systems here to recognize that 830 is 830. It seems pretty basic to me, but it seems like a problem. Revisit the high. You mean the all-time high up there at 59.52, 69.52? Yeah, maybe. I don't know. You never know. They're talking about wanting that rate cut and exorbitant, irrational exuberance, and well, there's the all-time high. Looks like we're not too far away from it. Here's the Trump dump. I don't anticipate what we're going to do, when or if. I just try to trade what I'm seeing. Let's see if I even have the. Oh, come on. See if I even have the all-time high in here. In the micros. All-time high. 29 October 2025. There you are, 69.51. Well, I've got 69.52 half or 51 half, and IRT is calling it 69.52, so shoot me. Shoot me. Man, I can't believe it. Well, I can't believe it. Beautiful setup. Signals, traded. And I'm busy fluffing around trying to troubleshoot. But hey, that's the correct way to do it, in my opinion. If I think that there's something wrong, or if something throws me off like that, why did that get that signal? Last thing I'm going to do is put a trade on and then go look. Ooh, now we have them lined up. Here's Antonio's favorite BPOC migration trade. I got to say, in all honesty, I don't know of anybody that trades that successfully and can demonstrate with statistics that they really do. A, and B, that I've never had anybody been able to explain to me what the parameters for entry are. Peter K or whatever it's called. He does statistics and stuff, and his one was long. Well, that's a stop. You know, that's, and I understand that could be, that is a signal. Yeah, could be. The minute it migrates, you take that direction. But I've not tried coding that to see what the statistics are, but just in my own personal trading and my journal results from before, when I tried that, it was just a dismal failure. So I'd love to know about that. And of course, Tom never actually takes the trades live, you know, on screen, nor does he ever. Like, where are the statistics for this vetted trade or this structured trade? Are there any? I'm sure there are somewhere, but I'd love to know what the parameters are. Because as we've discussed so many times before, how freaking obvious is it, right? It's the most obvious. I think this and the IB setup's the most obvious thing there are. How can you miss the yellow brick road moseying around over there? 11:30. Come on, man. Yeah. Knocking on heaven's door up there at 15, aren't they? How many times? 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15 times. Well, maybe that's it. Maybe it's a lucky number, 15 on 15. Maybe that's a super secret number. If that had something to do with the Illuminati or the Templars or, you know, Freemasons or something, then it would be for sure. It would be for sure a sign. Damn it. Damn it, Janet. I get all confused with which keyboard I'm using and mouse. Okay. Trying to answer some questions for Garrett over there. I don't know what screen I've got going on or whatever else, but there you go. Not sure what you mean by it's over for 15. But I probably said something stupid or whatever else. I don't know. Who knows? Yeah, I'm telling you what, boy, it's one of those situations where we're still putting a squeeze on them, is what it looks to me like. I mean, hey, it's just a pretty basic idea, but everybody out the window. Well, maybe not. Well, we're going to squeeze those shorts. We're going to squeeze them some more. The market goes up to go down and goes down to go up, right? I suppose it's important to understand that the futures market is a zero-sum game, and it is an impossibility that there's ever more sellers than buyers or vice versa. If somebody says, oh, the market went down because there was more sellers, well, then you know right away they don't know anything about futures. Think about the word. What do we trade here? Do we trade stocks? Do we trade futures shares? We trade futures contracts. A contract is an agreement between a buyer and a seller to execute a certain number of lots at a specific price. So it's impossible that there's ever more buyers than sellers or sellers than buyers. Absolutely. Price goes up or down based on aggression. If the sellers are more aggressive than the buyers, this is resting liquidity, right? These are resting orders. If the sellers are more aggressive than the buyers, they cross the inside market and hit the bid. If the buyers are more aggressive than the sellers, they cross the inside market and lift the ask. That's how the price goes up or down. But never, ever, once, ever in history are there more of one than the other. Period. Impossible. What else does that imply? Well, sellers. Every time somebody sold something and this market went this way, what happened? Somebody was on the other side of that. Buying. And how is that other somebody going to make profit or make money, take a profit? The market goes down to go up, goes up to go down. Basic. That's the futures market. It's a zero-sum game, and in my conspiracy, put on my conspiracy hat, my tinfoil hat, my opinion is that the other side of that trade, who has the pockets deep enough to be buying all this way down here? Not me. And then all of a sudden they want to take profit when they got all the inventory on they want. Up they go. And they start hitting out all these stops, bang, 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 and up to here, there's 583 and 225 and 50 and 235 and 286. Doodly do, right? That's how they make their money. That's my opinion. I got you now. Over 15 as far as price. There you are. Yeah, they busted through it. I got you now. Man, I wasn't paying attention here. Yeah, absolutely. They finally poked through it. And they got look at these stops up here. Remember when I was talking about all these pick the top guys that are going short and slapping their stops up here? There's 1,046 of them right there. That was that big order of 700 and something that had come in the market at 938, right? Yeah, okay. Yeah, I'm with you now. Sorry I was on a different wavelength there. You're absolutely right. It's over for 15. And I'm disappointed that I am. I haven't figured out, I understand that the correct overarching theory is to let your winners run and keep your losers short. It's real easy to do for me on in a shorter time frame, but I haven't worked out yet in my study time and my backtest time when you're supposed to be working on these things, not when you're trading. I haven't worked out a good, what I consider to be a good risk management or trade management idea with trailing stops, because that's obviously what you've got to do. You don't just leave your stop sitting down at your entry or your break-even point and then just hope for the best by keep moving your target up. You want to keep locking them in, trailing up, and it's so simple to see these areas on when you get zoomed out a little bit, or when you're a rear view mirror, internet guru. You can go, oh yeah, I trailed up to here, and I trailed up to here, and I trailed up to here. I'm going to trail up to here. Well, why didn't you trail to here? Why didn't you trail to here? Why didn't you trail up to here? Because they're looking at it. They're tricking you to thinking they're looking at the picture here. Now, why aren't you trail to here? Trail to here? Why didn't you trail to here? That's, I think, approaching it realistically and not bullshitistically. Yeah, it would have been lovely. So I don't know how to. That's something I need to look at long and hard and study and figure out how to best do that kind of a management situation where you let those winners run. ATR, I don't know. At this point, I'm using the brackets, right? And that's, you saw what happened when I tried to you saw what happened on Friday or Thursday or whatever day this was, 21st, Friday. T1, here was T2. I thought, well, I'll get another four couple points out of it down here just above the previous high, or the RTH high. Nothing. All the way back to a scratch. Now, this is where I dropped the ball significantly. Well, two things, I guess. Obviously, it's hindsight. What I didn't do, so far where I am in my thinking is, if I'm going to move my T2 first and foremost, I never move T1, and I never move my stop away from entry, ever in a gazillion years. So, after T1, and I think I'm going to try to let my winner run by moving T2, I need to have a real firm plan, previously backtested, what I'm going to do with my stop, how I'm going to trail my stop up, break even, T1, what? And I've actually been in the process of that with the backtesting. And the only way I know to do is what if, And I've tried a whole bunch of what ifs. And I'm still in that process. We'll talk about that when we're looking at the backtest idea. I normally would go for a walk, except for yesterday I went for quite a long one, and I think I'm going to walk in and take a shower and relax rest my eyes for a bit and be back at the back here in a minute. I've got no trade on the horizon. So I think I'll go get a little bit of a take that midday break for my eyes and whatnot, and I'll be back directly. I think the music should be okay for a while. Nothing going to happen in the trade as far as I'm concerned. Well, this is one hell of a Monday, huh? Raining, dark as night. I missed my good setup. Got nothing on the horizon anytime soon. I'm going to take advantage of tornado watch. Oh, great. Jesus, this place is one disaster after the other. They just kind of fall from one to the other. It's crazy. I'm going to try to get out there and get some exercise and get back. Have a good one. And up she goes, huh? That's pretty funny. Look at this volume profile. Whoop, 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 whoop. I don't think I've ever seen him just stair step up like that as far as volume. It's funny. I think of some other stuff to put on this tab, I guess. Boy, am I sorry I missed that trade. Only because I'm disciplined and I don't take trades that I don't have already, vetted to take and vetted setup. So there's nothing gonna happen for me here. And I know that. I try to do other things. Well, this is a, not that it matters much, but we're in a 12 to 1 statistic is active here today. Meaning that if you make whatever, however they go about it, whatever it says that if you make a new excess between 12 and 1 or 12 and 1300 in a day that's out of balance, there's a 90% probability you're going to put in a new excess above the previous. In other words, here's 12 to 1. We put in a new high for the market. Between now and the close, 90% probability we'll put in another one. We'll take these two out. Ugh. Worth noting that this is the Thanksgiving holiday week. Typically really light volume. Huge percentage of the traders have taken the whole week off, right? So don't hold your hopes up for a lot of action. I'm so disappointed that I missed that trade, but I'm glad I understand why. I didn't do anything stupid, take a stop or FOMO or anything like that, but I was put off by the system taking a trade that my chart didn't recognize, and I was strictly a oversight on my part updating the chart last night, but could have been something else, I recommend never, if you're not 100% sure about your signal, about your data, about your system, you don't put the trade on and then try to figure it out, in my opinion. And I didn't. Fortunately, I figured it out in about, I don't know how long, minute, few seconds, I don't know, but it was too late because the system had already left. The train had left the station by that point. Right there. Right there. The train left the station for the IBC off the top. And as you can see, it was a stellar ride. Now, I certainly didn't have a trade plan. I don't have a trade plan worked out properly for letting the winners run and managing them correctly. It needs to be a trail up under the swing lows typically, but I'd like to know I need to give some thought to a methodology for that. And until I have that methodology, I'm going to stick strictly to the brackets and not try to do any clever business like Friday and cost myself 60 ticks for two ticks. I didn't cost myself anything. I didn't lose. I took a scratch, but I was up 60 ticks and it came back to a scratch. So that's poor trade management. Fine risk management, but poor trade management. Boy, let me see if I can get groggy. It's quiet, it's dark, it's rainy. The house is quiet. The market's quiet. My wife comes by and says, let's go take a nap. Oh, boy, was that hard to say no. That was a hard one. So we're going to be at the power hour in 8 minutes, and then I'll go through the back testing. And typically the way I do it is this power hour on, a few minutes there, 20 or 30 minutes to go through all the back testing and my thinking about that, where I am with that, and how I vet these trade setups. And then about 14:30, we do a recap for the day and market on close and balance at 1450 every day. And there you go. There you go. And no, I don't expect any trades today. If I'm reading your mind, I don't expect any setups. I have 2 setups. There's 2 trades around the IB high and similarly around the IB low, and I don't expect those to present themselves again. So, yeah, here we are. This is really trading as a business, not as a video game or gambling. I wouldn't be surprised if even the White House crew were probably on limited activities this week. Actually, good for them, you know, good for them. So it's definitely not a you have to get your head around the fact that this is one trading day, you know, out of thousands of them. Same way with the trades, and one trade out of thousands. That's a good way to look at the FOMO idea. Nothing going on. 1500. Trump is going to be taking the microphone, so I think we're going to just dodge the bullet there, probably. Any possibility of random risk. Tomorrow, retail sales, PPI, consumer confidence. I think I'm okay with not having the, dropping the migrating VPOC flags. Keeps the column clean. I think it's good. I think it's a fine idea. Fine idea. I'm debating what to do over here. Whether to, I think I'm going to create another export and only export the trade trigger signal stuff, and then replace these price lines, because I have the flags, no problem. So if I replace these lines, only have the triggers here, I think that might, I don't know whether it'll help or not, to be honest with you. Don't know. I have to think about that again. As with everything else, sort of, if it isn't two minds, if it ain't broke, don't fix it. But the other one is, well, maybe that would be an improvement. So only way I know is to give it a whirl and see, and then if I don't like it, it can always go back the other way. Another thing to do is explore that. Is that simpler? Does that make the trade stuff more clear when I'm into the, when we're into the signal range? Because I don't use VWAP. I don't use the heat map for trade decisions like that. I have it so minimalized anyway, compared to the way most people have it. It's, it's almost a moot point. Oh, looky here, the world famous power hour. Wow, isn't that something? Okay, so I think that it's important to start with I approach trading as a I approach trading as a consistently profitable business of probabilities, based on probabilities, not a video game or gambling or gunslinging or whatever. And if you make money doing any other approach, then do not quit. If you make consistent profit, doing whatever it is, don't stop. This is my virtual journal, and I'm talking to myself. It's the only way I get my thoughts into the stream and the recording. And it's out there for anybody to, you know, take something out of or pick apart or whatever. So the first thing that you need to realize is that the market is a random environment. There are millions of traders expressing, and algorithms, whatever else, expressing their opinion on this market every second. So to try to predict where it's going to go or have some kind of, I guess prediction is the best way to put it. You're setting yourself up for failure and disappointment because it's a random market and it will go where it wants to go. I think it's much better to approach it from an anticipation. I anticipate that the context of the day is up and that we're likely, and the VPOC is migrating higher. In other words, the volume point of control is migrating higher. I suppose we're going to continue to make higher ground. I anticipate that. That's a much better way to approach it, I believe. Also, you need to believe that the outcome of the next trade is 50-50. Whether you want to believe it or not, this is a binary event. It can go up or it can go down. 50-50. There's no horizontal or movement on the price action. It's only up and down. Time. We put time on the market, and that's what gives it the horizontal appearance or horizontal movement. So how do you approach this besides just guessing or hunching or whatever else it is? I believe that you approach it like this. And first, let me say that this is not some epiphany that I had. This is based on the collective awareness of the most successful hedge fund and traders in the world. And I do mean that literally in the world. Jim Simmons, Ray Dalio, Ed Thorpe, Paul Tudor Jones, Ray Dalio, I think I mentioned him, Tom the Trader, Tom Sosnoff, Mark Douglas, Tom the Best Loser Wins guy. I mean, right down to the people that I trade with every day, like Mark and those guys. And what that approach is that you identify a pattern or scenario or setup that you can identify that happens, regularly, and that you can put specific parameters on to identify it. Like I have done with the initial balance trade. Then you capture a statistically significant data set of that exact setup and those parameters and determine mathematically if it has a statistical edge or expectancy or probability or whatever term you want to use for it. And if it does, first of all, let me also point out that you do all of that away from the live market in your backtesting, your homework period, whatever you want to call it. And once you determine that setup has an edge, then your job as a trader in the live market is to take that setup and every time it presents itself and rely on the law of large numbers to manifest the edge to your bank, to your account. Sounds simple, but that's exactly what it is. The difficult part is, just like me today, here was a setup exactly as planned, as tested, as back tested, and in fact my system took it on the chart over here. Took it right. It took it right there. For both targets, full profit targets, both of them. Boom, boom. 60 ticks, okay? I was put off, which I've talked about and probably boring if you heard it before. I didn't see my A signals here, only B and trigger, and so I didn't put the trade on manually. on Bookmap, through Bookmap, and because I wanted to know why. I found out why. It was just an oversight on my part. I changed a small technical, small nuance in the A signal last night in backtesting, and I forgot about the fact that the signal markers on this chart are completely independent of the signals and the rules in the backtest system, and I hadn't changed them, so I didn't have an A. But I didn't get all carried away and, oh God, what. I stopped. Unfortunately, it had moved away from me already, so it was no longer in my wheelhouse, and I'm certainly not going to chase something. But that's the way you do it. And that would have manifested 60 ticks to my bank account, specifically as set up, a very definitely pre-identified, pre-vetted trade. Set up and then became a trade. So that's what I work on whenever I'm not standing here, and how I am approaching trading. And it's the business way to do it. It's the way algos, of course, that's all they do. There's no discretion. There's no guessing. There's no, maybe, or, hunching or whatever else. And so that's how it works. That's how my system is developing. And the trades that I've developed are the initial balance. There's two trades that I've backtested and developed. 2 trades around each of the initial balance, from 2 around the high and 2 around the initial balance low. There's the IB continuation, which today was a perfect example. And there's the IB failure, which we didn't have even remotely today. How did this trade work, you ask? Well, here is the initial balance statistic. Here's the B signal. And here's the trigger. 1, 2, 3 rules, very specifically defined in the trading system, and very easily identified and followed by me, by an old human, if necessary, right? And that's it's important to point out that at this point, the trading system and this chart have nothing to do with live trading in my live account over here in Bookmap, which is on an AMP live funded account funded by me with my own money. This stuff is being traded on the IRT simulator internally, because I don't want the possibility of something being wrong and go into a live account until I have it completely worked out how the systems work with IRT, and I'll explain something about that later. So that's the idea. So how do you go about backtesting something? Well, as I said, you identify your parameters and the qualifications for your setup, and then you can either put some chart together like this and manually go along with the market and try to go back in time and see how many trades you got that worked or not. I don't think that's got a very good probability of working, because it's got to be specific. The rules can't be sloppy, in my opinion. They can't have any discretion. Oh, this is close enough. That's, So what I think you need to do is come up with a backtesting system somewhere where you use a computer and a backtest engine, as I've done here. Now, this is a specific rule for each and every step of each and every rule and each trade. Continuation, failure, IB high, same for the IB low. There's 40-something rules here, I think. And if I want to backtest them, I can do that very simply. I'm gonna remove the system from this chart right now because I don't want. I guess we have to really. So here's the backtest. Here's what we're gonna do. We're gonna backtest 500 days. How long do you think it would take you to go through 500 days of 1 minute bars and evaluate every one of these rules? That's what the system does. It evaluates these rules over every 1 minute candle, looking back 500 trading days. There you go. Took 5 seconds. 494 trading days, $134,000, 1,006 trades, 518 long, 488 short. $345 wins, 298 losers, 2.13 profit factor. And now IRT does it a little bit differently than I do. It figures a percent profitable or win rate here of 34%. But that's just profitable, not win rate. And the reason why I say that is if you add 300 and 345, that's about 650. Huh? And this is 1,000. So there's 400 and some trades which are scratch. Each of those scratches has a win and a loss. What I do is add those into the winners and losers, and then you get the accurate win rate. And I have a couple of ways to do that. Also notice that there's 8 consecutive winners in a row, 9 consecutive losers in a row. This is really backtest data. And if you want to get really into the weeds, you can look at each and every of the 1,000 trades going back to the December 26th of 2023 at 10:42 in the morning. We took this short, we got stopped out. We took this short or long, we got a T1 target and a T2 target. And there's the outcome in terms of dollars. And you can do that for every one of the 1,006 trades going back 454 days. Now that's real data. And what I do is a couple of different things. I can look at individually my trades this way. That didn't work out like I had it planned. I can enter these data over here and figure, work out the specs individually for each one as I go through the day. And what I do in the evenings is I've got this running total of backtests, what if, based on what ifs, and here you are. 12 tick stop, 12 tick target, 48 ticks. Trail trigger, 12. This is to break even. This one is not to break even. So this is the trade right here that we've just taken. And just backtest right there. I did this morning. I won't type them in now, but that's how it works. And here's all the metric, the real, true metrics that you want to think about. There's a 52.29% win rate, 47 for loss rate. Expectancy is 15.71. The R multiple is 0.65. Profit factor of 1.5. Risk to reward is 2.13. Trades per day is 2 plus. 8 wins, 9 losses. There's the winners, there's the longs, there's the shorts, there's the profit target, there's profit long and profit short. Now this is some notes for me as to what I changed on the rule. Here was the previous rule, and here's what I changed, and that's what I had forgotten to do on the chart. I had forgotten to update these on the chart. I hadn't even thought about it, to be honest with you. And that's why I hesitated and did not follow through on executing that trade, because something was wrong. The system took the trade correctly, but I couldn't visually verify that it was a trade because I had made a mistake. In other words, like usual, right? The shorts between the headset or shorts on my side of the monitor. So that's how I approach backtesting. And then once you've done this and you're comfortable with it, you or I work the exact same system up from zero on the next setup. Once I have 2 or 3 setups, then I have, I think, enough arrows and, bullets in the gun or whatever you want to call it, plays in the playbook to approach the market. For example, it should be obvious now, today, that once those 2 trades are out of the way, I have nothing to do. I can go for a walk, I can go to bed, I can do whatever. Would be nice to have more than one basic trade setup vetted, which I will do. Now, why did I start with the IB trades? Well, first of all, there's 2 of them, isn't there? There's an IB continuation and there's an IB failure. IB continuation is more applicable in a directional or trending day. Right here, there's the trade signal was right there. Right there. Trending day, huh? Directional. The IB failure, or the IBF, is a mean reversion trade, which is more indicative or more applicable to a rotational or balanced day. So I chose the IB trades because I at least started out with 2 opportunities. One for 2 different day types, the 2 different day types. If I'd have started with mean reversion, for example, I would only have 1. I would only be able to look for trades in a balanced market, not directional. Now, if this whole idea sounds a little bit familiar or whatever, it is. This is not only the business model of the most, like I said, that the most successful hedge fund and traders in the world have come up with, have realized is correct. It's the business model of the gaming industry from the point of view of a casino. A casino plays no game on the floor of the casino for which they have not previously identified an expectancy or an edge and specific rules. Then they put the game on the floor and they play that game with one mission in life. Play the game as many times as they can in 24 hours because that is utilizing the law of large numbers. They don't make the games up. They don't change the rules. They play the game specifically, each hand, each spin, each time. And that's what the most successful traders in the world do. And hedge funds, and certainly algo traders. When I ran that backtest, this computer ran over every one of these rules. Oh, I forgot to show you that. Let me do that. That's pretty cool. Let me just run this again, because it takes 5 seconds. I want to draw your attention to something if you think you're going to do this yourself manually. And you could, obviously, but here's why I don't think it's as efficient and certainly not perhaps as in-depth. There's 218,000 one-minute bars in 494 trading days of the regular trading session only. You'd have to go back through 218,000 bars and evaluate every one of these rules over each one of those bars. That's what the computer does. So for me, there was not even a question about what I had to do. I had to learn how to do the backtesting and get it straight. And that's what I have done. Now I only trade those trades, period. Now, and my statistics let me show you that here. So these are the backtest rules and the changes that I made. This is my sizing tool. And what this is, it's kind of grown. This is every trade this month. Each and every trade this month and all the specifics about it. And here's my philosophy. I will trade the micros until the P&L in the micros equals or is greater than a factor, which I chose 1.33 times a risk neutral 2-lot mini full stop. In other words, how much money do I risk on one of the 2-lot risk neutral 2-lot mini trades? The difference is I trade the 2-lot package that you've seen in Bookmap that I've gone over 1,000 times. Risk neutral 2-lot package, okay? I trade the micros until the P&L is equal to or greater than 1.33 times the risk of the mini, which is $300. So that's the the size up target is 319 ticks. When this column right here says 0, we can size up to a mini from micro. And here's the exact dates, contract, everything, execution, package, ticks. And in order to be a little bit, make sure I know what I'm doing on a bigger scale, it's how many trading days, trades per day, ticks per day, P&L, net P&L, that's after commissions. How many was a scratch, percent win rate, average winner, average loss, profit factor, and expectancy. And this is a running total every day. Had I put that trade in there today? Well, let's do that. Let's make believe. Okay, let's make believe. What would that be? Let's say 11. I hate doing the dates this way. I'm not used to that. I do the dates the other way. I gotta pull these down. Hold it. I gotta do this differently. I just gotta convert this to a table, and then these things will just automatically be there. I didn't start out doing this. Okay. P&L 60. 2 lots. 1.25. Whoa, 1.25. That should have picked up the tick value from the minis here. That sucks. Well, let's just do it this way. I'm going to get rid of it anyway. So that's what we would have had. There would have been the number. There would have been the size up ticks. Another 1.9 trades, and at this win rate, and I would be over the top, and I would be in that. Here's the loss factors, expectancy, trades, days, everything about it. Huh? So that's how I'm just trying. I try to look at this as many different ways as I can, so that I'm always honest with myself and know that I'm looking at the real facts. Now, this is obviously not a real trade, so let's get rid of this. I just erased all those. I'll fix that later. The formulas, I got to convert this thing to it. I've never worked with Google Sheets before, really. I don't even know how click this to convert it to a table. And I mean, that's what I've done forever in my regular stuff, but I don't know how to do that over here exactly. So that's another way I look at this. And I encourage you to do that. If you want a copy of this thing, I'm happy to do that. What this does is it just calculates the basic statistics for one set of trades, you know, one backtest at a time. This does each trade at a time, each day at a time. Okay. So now I'm going to take a bio break here, and then we will do the recap at the bottom of the hour. And yeah, this is trading, huh? This is trading as a business, not a video game, not gambling, not an adrenaline sport or a dopamine fix. This is really this is trading as a business. That's the difference. It's not great, exciting entertainment, you know, for you guys. I guess this stream is kind of like watching golf instead of football or something. But I assure you of one thing. I appreciate everybody that's coming by. I appreciate the feedback. Please subscribe, thumbs up. You know, that'd be a huge help. Maybe get some more people that get this. You know, some more people that are interested in trading this way. This is really trading. This is not internet bullshit or influencer stuff. Have you ever asked yourself why your internet, your YouTube, whatever those other places are, influence? Why they about every 3 months they have a video about the most fantastic indicator or setup that is a 95% win rate. And it's the same thing, opening range trade, whatever else. Do you know why? It's because they're selling. What they're doing is selling subs. They're getting paid by ad revenue, not trading. And who's going to go look at that stuff? New traders. So about every 3 months, they figure there's a new crop of traders coming through, and they throw that up again. Simple. This is a trading journal from A to Z. Every day is completely captured. Every day is up on the stream, is up on YouTube. I start every day at 8 o'clock in the morning with the setup and the pre-market and analysis of the overnight and all of those things, and we open the market at 8:30 and trade all day. And trade this way all day, using the methodology and the system that I believe is the only way to go. And I'm not saying my setup is the only setup that you can use or that can be had or developed. But you have to develop one that has a positive edge and trade that. You know, don't be clicking around. Don't be doing all this kind of... I don't recommend clicking around and doing those kind of things. So, where are we? Well, here's today. To be pretty clear what happened. We opened and we traded up and we haven't looked back much all day. Looking at this on the higher time frame. Here we are. Open. Tested down there a little bit and whoop, up we went. Same way with the NASDAQ. What does this shape tell you in market profile? P shape. What is that? That's short covering. Not too much of a surprise looking down here, is it? What do we do? Short the hell out of this. Remember that it's a zero-sum game, and that all the people that were selling this, the other side of their trade was a buyer. And how is that buyer, who has enough money to be short all of this inventory, how is that buyer, that entity, going to make money? They're going to take the market back up, wash all these guys out. Here's 1,119 stops. Here's 286 stops, 400 stops, 109 stops, 463, 1,008. You know, it is a zero-sum game, and there is, in futures, as I said earlier, it is an absolute fact. There's never more buyers than sellers, or vice versa. We trade contracts. A contract requires two people. It requires a buyer and a seller, or two entities. Get that very firmly rooted in your brain. It's not like stocks, where there's a pool of stocks and there can be a bunch of buyers taking it up and no sellers. No, impossible. Every time this market ticks up, somebody sold it and somebody bought it. Every time it ticks down, somebody sold it and somebody bought it. That's a fact. So the sooner you get your head around that and realize that the market goes down to go up and goes up to go down and goes down to go up, it's because futures are a zero-sum game, a zero-sum business. Okay, so here we are. And of course, I hope you realize that this is the Thanksgiving week. Thursday, the markets are closed. Friday, it's a half day. They're going to open at the ETH on 1700 Thursday and close at, I think, 1300 on Friday. I don't bring that data into my IRT. I scrub those 2 days. So I might stream, just watch the market. I might do something and then scrub over the weekend, but definitely not. There's no market open at all on Thursday. So there you go. All right. Let's see what else we have on tap. Well, we already talked about that quite a bit, I think. Here we are. This is the investing.com. This is free. The news sources that I use here are free for a reason. You can pay for them, absolutely. I'm sure they'd be tickled to death to get your money. And I suppose it's live and who knows what. But I figure that for the purposes of the stream, and for me, frankly, I don't mind. I think I want to make it accessible for everybody. So this is investing.com, the calendar for the week. Here's today, nothing there. Nothing to see here, boys and girls. You can filter it for your country, your time zone, the reports you want. You want 1, 2, or 3 stars. It doesn't have to have anything to do with the U.S. It can be the DAX, and you can be in Ukraine or somewhere, whatever you want to do, and this will give you that reporting. I prefer this format for screen snapping, capturing, putting in my Discord, whatever. And investing.com only deals with scheduled, proper financial reports, meetings, the FOMC, etc. It doesn't have any random other stuff in it. Also, here is earnings, which were about wrapped up, so that's a good thing. Holidays. Now, there's all you got to go down and sort. For some reason, it doesn't remember America. It doesn't remember the sort. I don't know why. Talk about the Thanksgiving. That's investing.com. The other source that I use is the newer one. It's called Financial Juice. This is a similar kind of a docket or calendar, but I don't like it as well. Except, notice this. Now they have the press secretary talking at 14:30. She's just now started. Previously, that didn't exist. It was only going to be Trump at 1500. So this is potential risk right here. As I talked about earlier, go back and look at critical risk in the timeline. So Financial Juice picks these things up into the docket through the day, and that's really nice. This side is more of a squawk box idea. So here she is talking about this and that and Maduro, and they believe Maduro's regime is illegitimate. In other words, they're setting themselves up. Trump can't get wiggle out of this. They can't get loose from the Epstein thing, so they're going to try the classic misdirection. I believe you watch and see that there's going to be a military action against Venezuela to get all the news, short-time news cycle, and all the focus off this Epstein story. I believe. So at 1450, we'll have the market on close orders up here, and at 1500, Trump will be doing his thing. And it looks like she's already on leave for Thanksgiving. Good for her. Yeah. So we'll wait for the market on close at 1500. Remember, every day, every trading day at 0800, like and subscribe would be super. Kick these, subs up to the gazillions or something. Put the bell thingy on every morning, every trading morning at 8 o'clock. And all through the entire trading day. And any questions, anything I can share. For example, I'm happy I share these session prices, which push continuously from 1700 on Sunday night through 1600 on Friday, or this week they won't. Just drop something, like and subscribe, and drop a note in the chat, and I'll hook you up with the URL for that. It comes from Google Sheets, pushes directly from my computer, starting at, like I said, 1700 on Sunday night. I'm happy to share that free. If these Excel sheets here, anything I'm doing over here with this kind of a thing to keep track of your trades and give you all these parameters, and or vetted trade gives you the basic stuff for any one setup you would do if you try to do them manually. That's cool. This is a vetted what if, which wouldn't help you much because this is just where I record my back test that I do a lot of, as you can see. And I do a lot of what ifs here, like, okay, 12, first of all, this is the basic risk neutral 2-lot package. Then I do what if stuff. What if we have at 12 ticks, we trail to break even? What happens? At 20 ticks, if we trail to break even plus the T1, what happened? As many things as I can think of to try to further identify the edge, which I can compound via the law of large numbers. I'm not sure I finished talking about that actually, but I know I talked about the casino and the fact that they play no game. Their only mission on the floor is to lean on the law of large numbers by taking as many instances of that game as they can. They already identify, they've already done the back testing, they already know what the stats are, they already know everything about the game when they put it on the casino floor. They know the rules, they know the stats. Their only job is to play that as many times as they can humanly possible. And the law of large numbers will manifest or compound to their bank account. Now, here's one for you. I understand that the edge or the expectancy for roulette in America is 2.5%. 2.5% edge. And they make millions of dollars. at 2.5% of the time. They have an edge or an expectancy every time they spin the wheel of 2.5%. You know, we're phenomenally better than that in trading. If you are religiously disciplined and don't go off the reservation and start making stuff up, or, oh, that's close enough to this and I'm going to trade that or whatever else. Another thing you can consider that may or may not make you feel better, but if you trade a coin flip religiously, strictly by the rules, you take 1 point or 3 points or whatever you want, winner, and 1 point and the exact same amount losers. So it's a 1-to-1. It's 50-50. And you stick to that exactly, and you capture a statistically significant data set from this market, you'll have a 50-50 win rate, and you will be a more successful trader than 94% of the retail traders that try day trading. Because they're not disciplined, they don't have a plan and a strategy that is proven statistically, and they crap out. They go YOLO, or this is good enough, or, oh, I think that, and somebody told them to do this. That's the problem, and it's a statistical fact. What I mean by a statistically significant data set in backtesting is you want to be outside the variance or random distribution, and random distribution is best described, I believe, with a coin flip again. If you flip a quarter, if you know what those are, flip a coin 10 times. It's not surprising to anybody that you're going to have more heads than tails, or vice versa. That's random distribution. That's variance. That's a sequence. Remember when I did the back test and I ran the back test and I said, look here, we've got eight winners, consecutive winners, and 7 consecutive losers. Those are within the random distribution. The reason you want that data set as big as you can is to approach reality, to identify whether if you flip a coin 1,000 times, you're going to be pretty close to 50-50, and that's what you want to identify, is what your real true edge is outside of random distribution. And we got 3.5 minutes for market on close. Yeah, there you go. I hope you had a great day. This is not exciting viewing, that's for sure, but this is the real deal. This is actually trading. By following a statistically verified setup with an edge, with a positive expectancy and a win rate. That's another thing I forgot to mention that might be important, I guess, while we're waiting. Because it's something that I hear a lot, and it's really it's really important. And I need to get these into the stream of the time chapters, right? So we can, I or anyone else can go to them. The win rate of and by itself is completely useless. And it's the stock and trade, the clickbait of everything on YouTube. 90% win rate. Well, yeah, you can have a 95% win rate, have a risk reward that's upside down, and you're going to go bankrupt in 10 trades. Meaningless. Taken in conjunction with the other parameters, which are important, that's one of the factors in calculating your expectancy. And your ratio or your R value, R multiple. But by itself, it's meaningless without taking it in the context of risk reward, etc. If you're curious how the formula for expectancy, simple. It's win rate times average winner minus loss rate times average loser. And that's basically your basic expectancy. And then if you divide that value by your risk, that gives you your R multiple, and that's the most accurate, probably, number you can come up with easily. And less than a minute now. Ooh, baby, 30 seconds, 15 seconds, 10 seconds. And I don't think the market on close imbalance is going to be mean jack, but let's see. I would suppose it'd be pretty small, but what do I know? Ten seconds. There we go. Don't blink or you'll miss it here. Nothing. It's not surprising at all. Not surprising at all. So, young Ms. Levitt concluded her remarks, and now I guess the Agent Orange is going to take the mic at the top of the hour. And there we go, market on close and balance. Oh, big. S&P 500, 2 billion, 3 million. S&P contracts sell side imbalance. This many more sellers, sell side orders than there are buy side. 1 billion, 52 million sell side NASDAQ. 896 million sell side Dow, and 14 million Mag 7. Sell side all. And next time you think that somebody's running your stops and hunting you down, remember that 2 billion, what did I just do? I don't want to do that. 2 billion, I didn't know you could do that. Click on it and they disappear. Well, there you go. 2 billion, 3 million S&P contracts, sell orders there. Suppose they're hunting your one stop or two contract. And imagine the value of 2 billion, 3 million contracts moving a tick at $12.50. I would guess it's going to be roughly around $24 billion. Right? And change? I don't guess they're probably looking for us. Probably not. Anyway, I don't think that's the case. So I'm going to wrap her up here at the top of the hour. Something else that's important that you need to remember that I always like to talk about at the end here is do you know, are you aware of what the most critical piece of equipment you have in your trading office is? It's sitting on your side of the monitor. We spend all our time and effort and money and thought, monitors this and refresh rate that and software something else and data feed what. Hardly anybody pays attention to you, to yourself. The traders to themselves. Your eyes and your brain take in all this input and all this data and make decisions faster than any computer can that you use to execute financial decisions for you and your family. Yet we spend all kinds of time with UPSs and backups for our computer gear. And a lot of people don't pay attention to be properly rested, properly hydrated, nutrition, plenty of food if you need it, whatever you need, whatever your system needs. Exercise. Be sure you get out and get healthy, get your blood pumping. Rest your eyes through the day, at least once or twice through the day. Stop staring at the screens, look out the window, get outside, get some natural light, let your eyes focus on the horizon, and get back to soft focus. That's huge. Think about your eyes. The short focus eye muscles are in constant tension the whole time you're staring at the charts. It's like squeeze your fists as tight as you can and stand that way for 6 hours. See how you feel. It's the same thing. So take care of yourself. Be rested. Don't be on emotional tilt. That's a really big one. Especially when if you're still struggling with trying to figure out about the monkey mind. I think the best advice about the monkey mind is just be vigilant that you're here and now aware of it. Be aware when FOMO rears its ugly head. Be aware when you're having an adrenaline pop and chasing or something like that, or getting mad, and don't act on it. I mean, you can go kick a hole in a wall, I guess, if you're prone to do that kind of thing. But what I mean is don't act on it with your mouse in the trading environment. Be an adult, That's the way I look at it. Pull up your boots, or cowboy up, whichever of those expressions you like, You're an adult and you just don't do that. So 4.5 minutes left in this trading session. I hope you were patient and traded your setups and were successful. I would have been phenomenally so had I thought about that chart last night when I was doing the backtesting rather than now, because that would have been the signal and I was all set to go. I just wasn't ready for the trade when the system took it because it didn't look like it was correct to me. And I'm certainly not gonna, I guess I should say I shouldn't second guess the system, but considering I built it and I tweaked the system last night and did this and that to make those rule changes, I'm going to defer to being cautious rather than not. And it took me 10 seconds or 15 to realize what the story was. But by then this had happened. And that's not the IB continuation anymore. That's chasing. I don't know whether they have it anymore. I used to just love it. Some of these systems have these trading software apps, have a button over there called Chase. It's like, oh boy, I don't think that's a good idea. That is completely playing into the adrenaline monkey mind. In my opinion, remember this is just my opinion based on the most successful traders I know of in the world, and they all agree. I've not found one of them that disagrees. If you find any kind of statement or book out of any one of the most successful traders that you can find in the world that says that probabilities and vetted trades isn't the way to trade, please put it in the Discord, put it in the chat, whatever. I'd really be curious to know that. I have never heard of anybody that disagreed with it. And every trader, no matter who they are, this Josh Breitstein or whatever, this young fella that's a successful trader that's now suddenly pushing himself all over YouTube. Same thing. Listen to him for 5 minutes talking about probabilities and vetted trade. Well, maybe not the exact same terminology, but the same idea and probabilities. Tom Sosnoff, it's based on statistics, based on our data and our number of occurrences, the law of large numbers. It's the same everywhere. All of those, and my thinking is, well, if all of the successful people have figured out that's the way to go, who am I to say it isn't? When in Rome, right? Well, we're going to be done here in 30 seconds. Have yourself a great day. Be sure you put up a notification or whatever. Like and subscribe on your way out the door. That'd be great. And see you tomorrow at 8 o'clock Central Standard Time. Bingo, bango, bongo. Here we go. I think I got the right button here. Let's check. That's the wrong one. There it is. All right. Have a great one. Remember to take care of yourself. Get away from the screens. Do something for your health. Just push back now. Do some sit-ups, push-ups, pull-ups. Chase mom around the house. Whatever it is. Whatever gets your blood going.